Oh, we're live. What is up, everybody? Happy hump day.
Wait, when you say live, what does that mean?
That means like we're going now. We are beaming up to a satellite, back down to living rooms around the county. So that's what that means. So again, happy hump day. It's the best day of the week, everyone. Welcome to Benzinga Live. I'm Spencer. That's Aaron. Big show planned today. We got a lot of guests on the hopper. We have, first up, in about a half hour from now, we're going to be joined by someone who runs one of the best Twitter accounts on FinTwit. His name is Mark Moran. He actually works with the person I'm referring to. His name is Litquidity. If you're not following Litquidity, they have like the dankest memes on FinTwit. So I definitely will recommend following them. We're going to talk to Mark Moran, who's the head of growth over at Liquidity Capital, at noon. We're talking to a really cool company at 12:30 called Dialect. This guy Tony Trzeciak he's a veteran. He served in Iraq, and now he like created this software where you can like talk or type to like his platform, and it does like natural language processing, and it like delivers whatever you ask for it. So like, give me the 10 stocks with the highest PE multiple. You just type that out and like it'll do it. So it's doing some pretty cool stuff. At 12:45, we're talking to Golden Matrix, ticker GMGI, and their CEO Brian Goodman. Very excited for that. And then at 1 o'clock today, we have Nic Chahine on from the Benzinga Options Bootcamp. So full slate of guests today. A lot to get to. Hit the like button. Hit subscribe. Tell your neighbors. Tell your friends. Tell your cousins that our show is starting right now.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news. All right, what is up, everybody? I see you, Nathan. I see you, the Ajax. I see you. This is now ridiculous. Okay, so let's first address the elephant in the room, which is that crazy graphic on the screen right there, right? That stuff on the bottom. What is that? That is the Rocket Mortgage Super Bowl squares. If you don't know what that is, it is a thing that they've been doing for probably like 3 or 4 years now, maybe a little bit longer. Benzinga is in what we call here like the Rocket family of companies, right? Our office is in their building, right? So they were kind enough to alert us to this promo, and they said, hey, if you want to tell your people about it, go for it. And we said, done. We're going to do it because they live upstairs and we live downstairs, so we wanted to do something kind for our neighbors. So check this out, okay? This promo, if you've never done like squares, or some people call it boxes, for the Super Bowl, it's very simple. All you do is you basically just pick numbers on a board, and depending on what the score of the game is, you could win money. How much money? Well, it says it on the screen right there. They're giving away 2 prizes of $500,000. All you have to do is scan the QR code up on the screen or go to that URL, rocketmortgagesquares.com. Again, this is for the Super Bowl, so we have time, right? We've got like a month, I think, right, Aaron? Because we've got this weekend for division, next weekend for championship, then the bye. So yeah, we've got 4 weeks until.
I mean, typically
it's February 7th, right? I think.
No. Typically, that might be the cutoff to enter the Super Bowl squares. But typically, yeah, the Super Bowl is like somewhere around February 7th. Sometime
they
in the
pushed it
first
back.
week.
This
is the first year that it's now the second week of February.
Right.
Is it also? No, I think it's the weekend before President's Day weekend.
Yeah, that's the third weekend.
Because that would be nice if it was on President's Day weekend,
what I
because
said.
Super Bowl Sunday and then you have Monday off
Dude,
work.
that's exactly. I just said that over the weekend. I was like, they should push it back an extra week, because everybody always, and by everybody I mean me, always complains about like we should have the day after the Super Bowl off, right? And that Monday is a federal holiday anyway.
Or keep President's Day, but then also make Monday a federal holiday after the Super Bowl.
I mean, we could do that. Beggars can't be choosers.
Okay,
I'm
that's
saying
fair.
we should move.
Randy likes
Roger
that.
Goodell, if you're watching, which I know you are, move the
Well,
Super Bowl.
I don't think Roger Goodell has the power to make a new federal holiday after the Super Bowl.
Do we?
I don't know that.
No. I'm asking him to move the Super Bowl. That's what I'm saying.
Oh.
Move the Super Bowl.
He's probably more likely to be able to do that than to make a new federal
That's
holiday.
what I'm saying. Move the Super Bowl to the following weekend. It's one later week, but we get the day off afterwards. That's what we all want. So this has been your daily Super Bowl segment brought to you by...
Well, and you remember the golf tournament we were talking about yesterday, the Waste Management Open?
Yeah.
That's the same weekend as the Super Bowl. So there will be some people that are there like at the golf course partying all weekend and then...
Why would they That's dumb. Why would they counter program?
I don't know, because like Sundays are the day of the golf tournament that are like the last day that people actually want to watch.
That's dumb.
But with that being said, I would imagine. Well, I don't know, because it's out in Arizona. Like I would imagine that the golf tournament's over by 6 p.m. By the time that's probably what they'll do. They'll probably start the Sunday round a little bit earlier.
Wait a minute.
But yeah,
Whatever.
guys, go to Rocket Mortgage, sign up. I know
I'll be doing it. He'll be doing it.
Well, we can do it twice, Spencer.
Should we do like a... Wait, can we do a pool? No, you can't do a pool. That's not how it works. Should we do like a Benzinga live Rocket Mortgage Squares thing? We're not going to do it today. Maybe we
you know what we should do?
What?
So a couple Super Bowls ago, we had this really fun 30 question. It was like a questionnaire almost.
Okay.
And you filled it out, and each thing was worth a point. And then by the end of the night, whoever had the most points won.
Can you give me what were the questions?
Will the national anthem be over or under 2 minutes? And then it'd be what's the first? It was the year that Maroon 5 was playing. It was what's the first song Maroon 5 is gonna play?
So it's just like a running survey, basically.
Yeah,
Interesting.
But you'd fill it all out at the beginning.
Well, yeah.
And then
That's interesting.
Yeah, and it's kind of like a fun interactive way because there are all these little side bets that don't even have anything to do with football that you're watching and rooting for.
Sure, interesting.
And we should do that. I'll get that set up.
All right, sweet. All right, anyway, scan the QR code. It's up on the top right of the screen right now. Let's move on to the markets here. We obviously have to start today with SoFi. Actually, David Green is the one that texted this to me last night. I was not at my computer when the news broke, but I got a text from David. I'll tell you what it said. It goes, SoFi got approved for bank up 17%. And I was like, my eyes popped out of my head. I was like, what? So anyway, that's the news from last night. SoFi anyone that's following the story knows you've been waiting for the OCC, the Office of the Controller of the Currency, to either approve or deny SoFi to get this banking license, right? That's the license that basically lets them do banking things, and it's such a regulated industry. It's the license that lets them operate a bank, basically, because they acquired this bank about a year ago, and that was meant to help them get through this process. But this was a major hurdle for them. This is a big deal. Let's not underestimate this headline. This is a big deal. So this was always my thesis. I bought this stock, and one of the key reasons was this banking license. I believe that SoFi is going to be the future of financial services. So that's why I bought the stock. And there are two reasons.
But I mean, Spencer, you were pumped when because I was still here at the office last night when you got the news.
I was so pumped.
You got pumped, and I was like, oh, okay, great, up 17%. And then
Tiny pie, that's basically what it was. Sorry.
I was like, oh, 17%. That's awesome. Then I look at the stock price, and it's at it's less than it was a month ago.
I know. So, okay.
So let's have a little bit of perspective here.
There's a lot to digest here. Here's what I'll say, okay? There are two reasons to sell a stock, right? One of them is it triggers your exit plan. If your exit plan is on the upside or the downside, or you had a price in mind or a target or a stop or whatever, a level, and that gets triggered, and that's your plan, then you sell. The other reason to sell a stock is if the fundamental story changes, right? If the CEO resigns, right, and they were the star, if they don't get a license, for example, if something fundamental with the company changes, that is also a good, if they lose a valuable contract, okay? These are all good reasons to sell a stock because the story changes fundamentally. The news last night is unquestionably great news for the future, the long-term future of SoFi, okay? So I definitely am not selling here. As far as what the stock has done, so yes, it went higher, you could say it went higher 17%, but it actually comes out to like what's like $1.50. It's not a lot. You got to know the market that you're in. We talked about this morning on pre-market prep, and I'm going to go to a daily chart here on SoFi. If it was a year ago, if we were in the same market that we were in January of 2021, SoFi is easily at $20 today, I think. But we're not. It is a different kind of market. All right, we're in the kind of market where growth is out of favor, and rips in every time a growth stock rips higher, those rips are sold. Okay, that's what you're seeing today a little bit, right? As I have someone speaking in my ear, but I hope you can't hear that. I don't know if they can hear that or not, but
I don't know.
But we heard it. So SoFi, obviously, if you look from the open, it's down. Okay, I'm not surprised by this. This doesn't surprise me. This is really par for the course for the last several months in growth stocks, right? But this is great news. Okay, this is unquestionably great news for the stock. And I think if you expect SoFi to go to 15, 16, 17 on this headline, I think your expectations need to be reset a little bit. Okay, I think just because we got this great news does not mean the stock has to go higher, because we're not in that kind of a market today. So, as I said this morning, it wouldn't shock me for a second if we're back at $12 by the end of the week, by Friday's close, right? We're back at 12. We're $1.50 away from that. That wouldn't really surprise me, okay? But that wouldn't concern me either. That's just the market we're in. We talk a lot about, let me go full screen here. We talk a lot about like how fundamentals matter, right? And that's true for the upside and true for the downside. Stocks get oversold just as much as they get overbought. I think SoFi is oversold, is my personal opinion. And I'm in this thing for the long term. Like, there's going to be a time when those fundamentals come back into play. It's not right. That time is not right now, frankly. Okay. But this is the catalyst that we were waiting for. This is the hurdle we were waiting for. We got it. The thesis is intact. That's the bottom line here. Forget what the stock is doing today. Forget if you're hoping for it to go to 20. I think you're wrong. The bottom line here is the thesis is intact. That's all that matters. Okay. The thesis did not change. If they did not get this license, this charter, then yeah, the thesis changes, and maybe we think about selling. But they got it. That's the bottom line. The thesis is intact here. So if you're in SoFi with me, I'm going to say this is going to be a long-term thing, okay? And I knew that going in. This was never a trade for me.
You better be right about this, because this is the one that I got my mom in.
What?
She asked me like what stock to buy, and I was like, I don't know, buy SoFi.
Oh, geez. All right.
For like a long-term
I better be right about it. Aaron's mom's retirement is banking on this. So this is going to be a several-year story, and that is okay. Okay? But I'm extremely excited. I'm very pumped about this, because this was always the thesis. The thesis is ringing true. Eventually, the stock will behave in a way that prices in this charter.
Can I play?
But it's not. That day is not today, I think.
Can I play the bearish advocate here?
Please. I love when people try to talk me out of things. I want to be talked out of things all the time.
So
that's the point.
Here's my thing.
Yes.
SoFi's obviously got a lot of money, right? They bought the rights to the football stadium out in Los Angeles.
Right.
They, you watch any sporting event, you see a bunch of SoFi commercials.
Oh yeah.
I actually kind of like that one. It's like catchy, that song. It's like Do the Money Dance. You know what I'm talking about? Yeah. I still, after all this marketing promotion, I do not know a single person that uses SoFi.
Are you all up in your friend's personal financial life?
Yes. Yes.
That's my question.
I'm the de facto financial advisor to all of my friends. That's why they're all broke. But
I'm not all up in my friend's business and family's business. I don't know who's. I don't use SoFi personally, but I'm not like I don't have a lot.
So you don't even sleep in the bed that you make, right? Like if you're a big investor in SoFi, you should want that to be your. You should love the product.
Yeah, I mean, I guess I don't have any. I could be a customer one day.
All right, Martin in the chat uses SoFi.
Thank you.
Do we got any other SoFi users out there?
I don't have any like loans right now. I'll be honest with you. I don't have any loans. I don't have any debt. If I need a loan one day, I will for sure hit up SoFi. But I don't. Maybe I can get like a credit card. But They just got this charter. It'll let them operate as a bank. I am looking to switch my bank. Actually, I've talked about this. I have Capital One. I'm not particularly happy with it, but I've never. It's the bank I've always had for the last decade plus. So I've never switched a bank since I've had it. So I'm looking to switch banks. Maybe I will strongly consider SoFi for real. But I think just because I don't use it doesn't mean I don't love it.
I'm not saying you have to use it to be an investor. I'm just saying I don't know. I'll ask. So I'll do some research.
All right.
Try to find.
And Firod, I appreciate the sentiment. I definitely did not pump this. I wish I had that kind of responsibility and power. Alas, I do not. If I did, SoFi would be at more. It would be at more than 14. Let's put it that way. Mitch says he put a poll up in the chat. Oh boy. Let's see what this poll said. I have to go to YouTube. 1 second. Again, I'm not trying to talk you all into SoFi. I'm really not. I'm just saying if you're in it with me, this is good news. Don't freak out because the stock is not ripping higher today. Seriously, don't do that. Let's see what this poll is. Do you use SoFi or know someone that does? Aaron, this poll's for you.
All right.
Do you want to guess?
All right. Well, know someone who does.
Do you want to guess what the breakdown is right now?
I don't know.
It's 17% yes.
Okay, see, there you go. And that's not even do you use SoFi. That's or if you know anyone in your life that does. I'm not saying they can't grow their user base, whatever, but I think that'll be an important metric for them going over.
23% yes.
MAUs, monthly average users.
I think it's active.
Monthly active users.
I don't know if that's a metric for them.
It should be. I mean, shoot.
They've got they've got ETFs. They've got loans. They've got everything. I think this company is kind of the future of finance, and so I'm bullish.
And also, it doesn't need. I mean, look, Tesla's stock has nothing to do with how many cars they sell. So maybe SoFi stock has nothing to do with how many accounts or money they make.
See, fundamentals don't matter.
Oh,
was that the takeaway here? I don't know. Well, no, but again, long-term great headline. Yes, Buffalo by bicycle. The online banking space is incredibly competitive. It is basically a fee war, right, with the race to zero. That applies, broadly speaking, across the board. That being said, Buffalo, rising rate environment, good for financials.
Okay.
I'm just
all right,
saying.
Now you're talking.
Now we're talking.
I like that.
Now we're talking.
I like that.
I'm just saying. Anyway, SoFi... I hope now we can at least stop getting questions every day about this damn stock. It is the biggest bag I'm holding by a mile. Whatever. Let's move on here. Aaron, I screwed up. I did a bad thing.
Color me shocked.
I did no, usually you're the one that does the bad thing. I did the bad thing yesterday. Actually, it was really today. It was the bad thing. So, okay. So I bought DWAC. That was not the bad thing. You can buy anything you want as long as you have a plan. So I bought DWAC live on the At the Close show yesterday. Let me just zoom in on the chart for you. This is a 15-minute chart. I bought the stock probably somewhere in this, not probably, definitely somewhere. It was in the $88 range. That's where I bought it. Okay. And I said at the time was, all right, well, I was trying to figure out where would I sell it, right? Because you got to have some plan. So I put up the VWAP. Okay, and I'm going to do it right now again. I put up the VWAP, and at the time, the VWAP, it was at 81, right? So I thought, all right, that seems like a reasonable thing to do. So I'm going to just place a sell stop at 81. By the way, that almost got filled after hours, but that's neither here nor there. Anyway, fast forward to this morning. Obviously, what did DWAC get to? 92? 92.60? 90, it got to 93. Wow. All right. 93. Anyway, big red bar, big flush off the open, right? That's the story of the day. So now it's 9:40, 9:35, 9:40. And I'm I'm on phone calls. I'm doing work, right? You know what I mean? But I'm also watching the stock like a hawk. And I did a bad thing. The bad thing was I canceled my sell order. Okay? This I deserve all the hate in the world for this. So I canceled my order, and I watched it go. How low did we get today? 78. Yeah, we got to 78. I watched it go to 78. And now we're obviously back at 81 right now. So I don't have any orders out on DWAC at the moment. But I'm still holding it. This is, I should mention, my YOLO trading account, which I have not blown up yet, but I'm liable to one of these days. It's a very small account. I'm risking money that I can afford to lose. I'm basically doing the equivalent of like betting on a football game. That's what this is to me. As far as financial ramifications, it's money that I can afford to throw out the window. It's a couple $100, right? So it's a small position. But I don't know what to do. Now I don't know what to do, everyone. Okay. Hertz Scrambler says, why would you do that? Hertz Scrambler, we all do things and we don't know why we do them. Okay? I don't know why I did it. Maybe part of me wanted to go down with the ship. Okay? Maybe part of me thought, maybe I looked at the daily and I thought, well, it does come back it does seem to come back a lot. I don't know why I did it. I just did. I didn't want to sell this morning. So that's where I'm at. I told you, I did a bad thing. Shelly is at least offering like actionable advice. Thank you, Shelly. I appreciate that. Stop loss at today's low. So 78. Yeah. Yeah, I could.
Dude, how have you been all working remote for like 2 years and I still get screwed up by time zones?
What? I don't know. What does that have to do with this? I have no idea. What are you talking about?
I don't know. I just got screwed up by time zones real quick. They're tough, man. I mean,
time zones are tough?
Yeah.
Dude, we should just have one time zone, right?
I don't know. Then what? Then like it'd be either like getting dark here at like 3 p.m. or getting light on the West Coast. It'd be like very weird.
Oh yeah.
I don't know.
It's better than how it used to be. The old system where there was no uniform time. It was like it would change by the city, right? Anyway. So that's where I'm at in DWAC. I screwed up. For whatever it's worth, this is right around where my stop was, where we are right now, $81. I think it was like 81.50 or something. So I don't know. I don't know. I'm gonna have to keep an eye on this. I might wake up tomorrow or come back to this in a couple hours and I'm made all my money back, or I lost half my account. I don't know. But I screwed the pooch here. Again, with the caveat that this is money I can afford to lose. If you are trading money you can't afford to lose. If you're trading money that's not yours, don't do this. I saw a post on Reddit, and I don't want to like call anyone out or anything, but I saw a post on Reddit. It was like
call him out.
It was last week.
Do it.
And like I felt so bad for the guy. It was in, I think it was in like the stock market, or I think it may have been in like the stock subreddit. And he basically was like, wrote a whole post about how he's calling it quits, how he can't trade anymore. It's too much for him. And the very beginning, he talks about how he paper traded for like 6 months. He got really good at it, right? At paper trading. So he took out a personal loan and traded with the personal loan.
And he was still really good at it?
No. He lost his money. Or he was
How did he go from being so good with paper to...
It's a different ball game. And like the real takeaway there, and the top comment reflected this, it was like, dude, don't trade money that's not yours. If you can't afford it, don't do it. If you're risking all your capital, if you have to take out a loan, if you have to leverage up to day trade, don't do that. That goes without saying.
Yeah. Trust me, it's so easy to... I mean, are we talking options here?
Anything. It goes without saying. Don't trade money you can't afford to lose.
Yeah, that's how, people make fun of me sometimes in the comments for how I trade my options. Look, I look at it as like if I throw a $300 out of the money call, like Spencer said, like I'm effectively betting on a football game. I don't look at that any differently than throwing $300 on a football game. The difference is if I throw $300 on a football game, I'll probably make $300 back. If I throw $300 on an out of money call and it hits, I can make a fucking grand back.
I know. So I felt so bad for this guy. I think he gets like, I don't know how old he was, but he had this whole long screed about how he had done the paper trading and he had a strategy and it was working for him, and
Paper, I don't know. Like, I don't think you're gonna lose. I don't think you're gonna learn the same by losing money paper trading. By losing real money. That's how you really learn.
It's a different ball game. You're right. It's a different ball game entirely.
Do you remember?
I felt so bad for the guy.
This was more than a year ago now, but do you remember when Chamath tweeted, "When Bitcoin gets to 150K, I'll buy the Hamptons and convert it to a sleepaway camp for kids, working farms, and low-cost housing"?
No, I don't remember that.
Okay, well, people were making fun of it at the time, but my friend just sent me a tweet that said, "Thank God Bitcoin never got to 150K. Those camps would be pretty scary."
Dude.
Oh my God. I love how so if you've been following FinTwit like since the COVID pandemic, like since March of 2020, Chamath has gone from being like the most universally loved guy, like the next Warren Buffett, to just being the most and
that is bad. That's a bad
he's
joke.
getting a lot of flack right now, like for good reason. But even before this, like he's become kind of like a joke and a meme because like all of his, like if you look at a graph, like someone made a not a fund but like an index tracking all of his SPACs or investments over the last year.
SoFi is in that,
and it looks identical to like Kathy. It's just like up, and then
yeah, sure.
SoFi, Virgin Galactic, Clover Health, like all these names
They're
that he's bombed out of.
Yeah, well, he sold. He also made bank. This goes to this idea that I have. Okay, everything should be tradable. You know what I mean? Like sentiment on a person should be tradable.
Oh, that's
you know what
they're
I mean?
Talking about that with like social
sports teams,
like social like coins, like influencers. Like Charlie D'Amelio will have her own coin, and then the market there's a set number of minted, say 100,000 for like each person. So then it's all based on like the value of how much someone's willing to pay for it. Like, I think that's the direction we're heading. It's kind of scary, kind of weird.
Wouldn't you love to trade a sports team? Like they sign a big free agent and their stock goes up or their token goes up, whatever.
There's going to be an
I would love that.
ATS. What does that stand for? Alternative
trading service.
Trading
system.
There's going to be an ATS for everything.
Dude, I'm so excited. I cannot wait to trade sports teams. You know what I mean? Trade the token, like trade Yankees token. You know what I mean? Oh man, that's the best.
All right, so who's like a famous person, influencer that you would short?
Well, Chamath is at an all-time low.
He's at an all-time low.
So I don't know if I would,
a premium for.
I don't know if I would short
right
that now. Right now. A celebrity that I would short right now.
Yeah,
I'd be curious to get our next guest thoughts on this. We'll bring him on in a second. I have to think about this one for a minute. I don't know. I don't know. I'd have to find one that's not at an all-time low. Like D&D, the guys from Game of Thrones, the creators of Game of Thrones.
Oh yeah, they've been at an all-time low.
I know it's hard. I don't know if you can short them right now. It's tough.
What they do? They like left Game of Thrones to make Star Wars, or no? They basically just like blew off the last 2 seasons of Game of Thrones.
Yeah.
Because they were like, oh, we're focusing on Star Wars, and then they were like, you know what? Those last 2 seasons of Game of Thrones were so shitty. You're not doing Star Wars anymore.
Right. Basically, what happened. This is the whole can of worms. This might be the whole show today, for all we know. Hey, let's bring on our first guest here. Super excited for this. Again, as I said off the top, if you're on Twitter and you don't follow Litquidity, Litquidity, it's Liquidity with a T in it. I'll bring up the Twitter account. You're missing out on like some spicy memes, like extra spicy quality memes. So our first guest today has actually joined up with the person behind that account, and they've created a firm, Liquidity Capital. So Mark Moran is the head of growth and operations at Liquidity Capital, and let's get him on the show right now. Mark, what's up, man? How we doing?
How we doing, guys? Thanks for having me. Really appreciate it.
So we're talking about shorting celebrities, if you could. Is there any celebrity that you would short right now?
I was listening to your prior segment on the Chamath tracker that you mentioned, and so someone recently started a Kramer tracker, and I feel like that's going to bring to light a lot of detail for his trades over time. So I would probably short Jim Cramer right now.
Oh,
okay,
not a bad one.
That's a good, yeah. I like that.
That's not a bad. That's not a bad
too bad,
suggestion.
right?
Although I will say, like, people were sharing around that tweet that were like all of the stocks that Kramer picked, and it was like
I saw that tweet.
They were all red. Like, there's no way that's actually all of them.
I saw that tweet, but also that's not
21,000 over time that he's done.
Right. So like you got to throw in a couple green. Well, I mean, I'll give him credit on Nvidia, right? But outside of that, yeah, he's been pretty bad the last year and a half.
It's not just him though. That's stock picking. Like it's
only 3 hedge funds beat the overall market last year, or 3
There's no way.
3 major hedge funds.
It's got to be more than that.
Oh, I'll show you.
Liquidity Capital. Did you guys beat the S&P last year?
Oh, of course we did. We outperformed it significantly, all based off of our meme stocks and our NFT portfolio.
There you go. So, Mark, actually, I was listening to the podcast, Big Swinging Decks.
Yes.
And it's still in its kind of infant stage, right? Only two episodes out right now.
Yep.
How's that process been? I mean, it's 2022. You're officially a podcaster now.
Oh,
exactly.
With I guess like 60% of the world right now. I mean, Spencer and I are podcasters too, so we have this brethren now.
I love it. I love it. And guys, it's great to be part of this society with you. I joke with my mom now because both of her sons have podcasts. So I don't know how she feels about raising two podcasters, but that's what happened.
She always knew.
She always knew. It's just
someday.
Exactly.
Oh,
But we started off with the idea of this podcast to call it Big Swinging Decks. That was about in October when we first started pairing up, me and Lit, that's the anonymous individual who runs the account. So we refer to him as Lit in public. And, we wanted to make it something that would be a little bit on Wall Street culture that could blend our backgrounds, having been former bankers, but also talk about current events in an informative way with some nice guests. And we were very fortunate to be able to ink what will be the largest podcast deal ever for new podcasters with a crypto exchange. We're going to be announcing that in the near future. So that really provided a lot of runway for some money that will come in that we'll be able to use to grow the company. And so we had our first two episodes, like you said. After the first episode, we actually reached on Spotify #4 business podcast in the country. And I think we were 83rd overall. In the top 100. So we're super pleased. We had Friday Beers on as our first official guest when that came out this past Tuesday. But we got a lot more planned for this and think the feedback has been very positive so far. And we're really excited to kind of open up the kimono on Wall Street, as we like to say, with more.
Well, that's what I think is so interesting because, I was listening to the Friday Beers interview and those guys, talk about like being from Greenwich, kind of growing up in this like finance dominated culture. And there's this sentiment that was mentioned in the podcast as well of like work hard, play hard, and I feel like we're getting to a point finally where like a lot of these finance bros, whatever like people are trading stocks, like we can like laugh about it, like we can have a good time. We don't need to like take ourselves so seriously that we think we're like so important that we can't kick back, like make fun of ourselves and have a good time.
Exactly. And I think that's where this opportunity for Litquidity has come. Now, this is something that Lit has grown over the past 5 years to be this kind of almost a mainstream brand. We're basically like this close to cracking there. But I think it's something that, when you look at the interactions we have with various CEOs of banks, with all the employees, essentially, it's something that people are starting to be able to laugh at themselves more. They're starting to be able to kind of highlight aspects of their work that they normally wouldn't be able to before social media. And I think we're kind of picking up on this populist sentiment almost. And one of the things that really excited me, that ultimately led me to kind of want to pursue this full time, is now when you have so many more people involved in the stock market with the rise of Wall Street bets, more retail investors being involved, there's so much more potential for this kind of new form of social media, not only to make people laugh, but to really be a kind of proprietary source of news.
So how do you, because you guys were kind of talking about that with the Friday Beers guys too, about like being kind of that close to mainstream. But like, let's face it, like more people drink Friday Beers than are interested like in finance in Wall Street. So like how does Litquidity like take that next step? It's like to bring it in a wider audience than just like guys like Spencer and I that trade stocks or finance bros that are working on Wall Street.
Yeah, so I think first it involves the humor, kind of keeping this relatable voice of something that, it's a very avant-garde page that we have that Lit has developed over the past 5 years where, it's kind of representative of Gen Z millennials in the workforce and kind of an uprising against their boomer bosses, if you will. And so I think that part has been established. And then the next part is really showing, when you think about mainstream financial news, you have CNBC, Fox Business, Bloomberg, Wall Street Journal, right? All of those sources is just so dry. It's not really appealing to people and what you're actually thinking. Like in watching you guys are saying what you think, you're having fun, you're joking around. And that's what we want to bring to light to this, where my favorite comment that someone said to us about the podcast was, I've never seen someone intertwine being so immature with saying such informative thoughts. And that's exactly the brand that we're trying to represent here.
No, I 100% agree. I mean, in the podcast I was listening to, you guys were talking about like being open, like talking about mental health, saying like, look, at the end of the day, like we can think we're all, hot shit, but at the end of the day, like we all are looking forward to like the weekends and like having fun with our friends, and we're gonna like have those same emotions. So, I mean, I think it's awesome what you guys are doing. I love too just this idea that like kind of using memes, like to like looking at memes through like a storytelling lens, right? You're like taking old videos and really repurposing them to like tell a story.
Exactly. I mean, to me, a meme is kind of a modern form of communication that has so many layers to it that, it's a work of art, essentially, that you're able to tell so many different stories and highlight so many things that you couldn't previously. And so I personally think that once we take this page, we grow it, we build it, and it'll be a case study taught in journalism schools in the future. But I also think, when I don't know if you guys have kids, I personally know, but when kids in the future are taught, they're going to be learning and looking at memes and history books. And I think we're all on kind of the cutting edge of just this new medium of communication and art, really.
Wait, Spencer, show this top video real quick. I think this one might have been my favorite. I didn't even know this was the pinned tweet on here, because this is the one that like I think of, kind of taking this like Friday Beers-esque meme where you have the video, you add the captions. I've actually made a couple like off this same style, and that's what I love about like the modern day.
This meme is nuts without the volume.
I know, but the modern day like meme as a storytelling, it's kind of like art, right? Like it's gonna evolve.
Exactly.
You have like other artists that like put something out, and then you kind of like take that for inspiration, but then improve on it. And I think we're just gonna keep going down that route until like who knows what memes are gonna look like in 2, 3, 4 years from now.
Exactly. And you just kind of see them advancing, right? Like, I love this video because it's taking kind of this compilation of all these relatable scenes that we know of, like the Wolf of Wall Street one, that's playing right now. And then it's putting on this kind of modern flair and the unique voice that the account has. And so Friday Beers, got to credit them for being the ones who really created this medium. You have a bunch of other accounts doing that now. And, it's something that I think as more people devote more and more time, not only on the internet, but to making memes, we're just really going to see this advance more and more. I mean, there's this app called Pinata Farms where you can essentially just like take pictures of your friends. It'll crop out surrounding them. So you just have their faces, and you can make videos of people dancing, doing God knows what, in 30 seconds. It's phenomenal. It's a great time.
We are familiar. We are familiar.
Men of fine taste.
But Mark, my personal take here is like, with regards to someone like Litquidity, like, the memes and the fun, like the humor, to me, that seems like easier than the other half of the equation, which is like actually saying like good shit, like saying shit that actually like people are like, oh, like that's like a smart take, you know what I mean? Like, so that's the harder part to me. So like, and that's the kind of thing that is one of the reasons why Litquidity has almost 200,000 Twitter followers, and it's like a lot of people on FinTwit. Like, people on FinTwit maybe they follow you if you're funny, but they really like you if you're funny and you like make sense, like sensible. So that to me is the harder part of the equation, and I think it probably speaks to like your background and Lit's background, right? Is that you guys are both like, you worked on Wall Street, so it's you're of that world.
Exactly. And, Lit's approach when starting this page was kind of ripped from his previous experience being a banker and working in private equity, where he's going to put a work product out there, but that work product is going to be something that's unique in a level that it's done, in a much cleaner format, with much more attention to detail than a lot of other people. And I think that's something, when he was thinking about expanding this, bringing me on, someone with the same background, having worked in banking as well, it's really important, like you're saying, to not only be funny, but to also have this, insightful voice that I think, and I love FinTwit. It's something that I started getting on this year, and it's absolutely wild. But you're right. Sometimes some of the takes, they're not the most intelligent thing in the world. And so, it's something for us, kind of being an established presence there. You start to put more and more content out there. You start to have more and more serious takes that people, really appreciate. And I think that's how you grow, because for us, like when you're thinking about starting any media company, usually you're starting the business and then you're getting the following. We have the following right now. And I think the most valuable thing that we do with the Follow Unit is to kind of keep this unique voice and to really kind of show, look, as we grow, as we build, we're still the exact same company that, you know, the Litquidity meme page was 5 years ago. And I think that's something that's developed a lot of trust with the audience and allows us to continue to grow.
So you just mentioned like you start with the following, and then now you're getting into the business, and I feel like that's just kind of like where we're heading as a side. I mean, I don't know if you guys saw the article a couple days ago. It was like Charlie D'Amelio made more than these Fortune 500 CEOs, which is funny to me because you got to imagine that some of these like Fortune 500 CEOs have a little bit of an ego, and they're like, oh, this TikTok 17-year-old girl like made more than me this year.
Exactly.
But so what are those like next steps for monetizing that? You know, you've got a big following, you've got the recognizability,
Got the podcast.
you've got the podcast. So what are the next steps for kind of monetizing that?
Sure. So first with the podcast, we're going to continue to grow that as we kind of get through our first season. We're going to start a second podcast that will be called Big Swinging Divas. That will have 2 female hosts. And so they'll be able to talk about kind of from a female perspective, working in a male-dominated work environment, which I think is going to be phenomenal. Something that is out there to a certain extent, but really not going to be covered in the way that these 2 women will be covering it. So we're really excited for that. We have a newsletter, Exec-Sum, that has 103,000 subscribers. That started in January of last year, so phenomenal growth, something that we see that growing into the future. And kind of the unique opportunity for us, though, as we think about growing is that, you know, if you're a kid going into college and you're thinking about maybe going into finance, you'll follow the Liquidity page at 18. So then for us, we started a student athlete program that's going to help kind of raise awareness for the brand with athletes. That program is unique to NIL programs because it's really going to afford the opportunity for these kids to get ready for interview prep. We've teamed with a company called Office Hours, where we'll be providing these modules to help them with their preparation. So that's something we're really excited about to grow the brand on campus. But then when we think about kind of what are the next steps for us, every kind of the traditional pipeline for someone who's an investment banking analyst is then after 2 years switch over to private equity. So we see a very, very big opportunity to move into the recruitment game and to really disrupt that. We're going to be making an announcement of a second hire for the company in the very near future who has experience in that space, and something I think, you know, really kind of disrupting this game that is very high margin for a lot of people, but to do it in a way that democratizes it, provides for more transparency, is something that is the next logical evolution for us as a company. But for the media side, we just plan to continue to maintain this authentic voice, get more into video content since I joined and am not anonymous, and as we hire more people, really kind of grow that out more.
So yeah, if you ever wonder what former Wall Street guys when they run a meme page looks like, this is it.
Exactly. Just living the dream.
Wait, a quick question on the meme front. How does the creation of a meme work? Is there?
Oh, come on.
Is it no? Is it like you go from idea to posting in a minute, or do you think about it a little bit? Everyone's different. Don't assume.
Yeah,
I'm sorry.
And look, when you're thinking of memes as an art, everyone has a different approach, right? And I can say a lot of this is that when you're dialed in on the internet, on FinTwit, for a majority of the day, you're kind of sensing trends. You see when a meme, it's like with the Chamath meme below the line yesterday, right? Like that hits, and you're like, okay, dude, this is a meme.
That meme was absurd, but I loved it.
Right, it's hilarious. And so then you're like, okay, using all of my skill set, my knowledge base, what can I then apply to this that's going to make it kind of more of a broader appeal? So for me personally, when I'm doing it, it tends to happen in real time. Like I don't like to draft stuff up or kind of think about it. It's more, here's the inspiration. Maybe you'll tweak a few words, run it by, one or two friends, but a lot of it's real time. I'd say with the videos, that's something that obviously takes more time to produce. So, that you kind of have more of a vision, can think it out more. But for the straight memes where it's just a picture, that's all real time. That's just, being dialed into the community.
So Mark, I if you're ever questioning your influence or Liquidity's influence, just in the same way that, Friday Beer influenced Lit to start making these memes, I got influenced by Liquidity to kind of try on my own. I want to show you one because I know you're an expert, and I want the harsh feedback. Like I want you to act like I'm like a junior analyst giving a presentation, and you're a founding partner.
Oh boy.
All right, let me see if I can figure out how to play this. This is a little old, so. Oh, we don't get sound?
You have to share your computer audio. It's okay. The video gets the job done. Okay. We got Happy Gilmore.
Yeah.
We
So you
got
start with like the classic movie that everyone knows and loves.
We got the financial concept, the out of the money calls on Tesla. Yeah.
Okay.
Okay. These are Benzinga guys. You might not get that, but it's okay. It's okay.
Good.
Yeah.
Good.
Yeah.
Yeah.
Oh man, this is good, Aaron. Oh, the 850 strike.
Drinks on me. Girlfriend's new purse.
Yes.
Luke. I mean, I think it's a starting point, right?
I think, look, and what I love that you did there is so it kind of in that video content, right? It's always about having, you're following along and you kind of think what is going to happen next, but then you see the girlfriend's new purse at the end and that's just flashing by at the end. And that to me is what makes it. So it's having this kind of unique, surprising thing. Great job. Very, very good job for your first attempt.
All right.
Can we get some applause here?
Yeah, let's edit some applause in.
There we go.
Good job, Aaron.
Amazing.
The founding partner of the firm approved of my presentation. So.
Mark Moran again. Litquidity Capital. I dropped the link to the podcast. Big Swing Index.
Amazing.
It's in the chat. Throw it in the description as well. But again, Litquidity at Lit Capital on Twitter. Professional memers. I had one last question, but I don't remember what it was. So
I distracted him. Mark, we'll have to get you on again soon, and maybe next time Lit can join us, like just audio only or something.
Definitely. We're willing to do anything we can for our fellow memers in the meme community. So just let us know. We'll be here.
And fellow podcasters, don't forget it.
Hey, exactly.
Don't forget to like and subscribe. Thanks a lot, Mark.
Thanks a lot, guys. Appreciate it.
I just remembered what my thought was going to be, and it was my thought was, it's funny how like the more things change, the more they stay the same. And so
there's a Latin phrase for that.
I'll tell you what I mean by that. The liquidity model was acquire the audience, monetize later, right? That's Facebook's model, right? That's Twitter's model. Acquire the users, figure the rest of the shit out later. You know what I mean? But get the users first.
Well, I'll be speculating here, but I'd imagine that like when Lit started making these memes and started the page, it wasn't with the idea of like garnering an audience and monetizing it. It was just having fun and giving his like social commentary. And that's really what memes are now. Is it's like a way to give that social commentary in a new way where. I mean, it's just like mediums of communication are always going to be developing. And I had honestly never really thought of memes like that, like a way to tell a story, a way to tell a viewpoint. And the way I was listening to the Liquidity guys and the Friday Beers talk about it, it was like, wow, like they're really showing their personality, like showing who they are, showing the lens through they see the world through these memes, which was interesting to me.
No, it may not be intentional. It may not be thinking about that.
No, you're 100%
but
right.
Like, it's the same path. You acquire the audience, you monetize it later. The audience is the hard part. You get that. That's 3/4 of the battle, or more. So awesome stuff. We will definitely get Mark back on the show with Lit at some point if we can, because basically professional memers now. I
mean, think about it. If you have an audience, like if you have 500,000 followers on Twitter and they all love you and you say, hey, I'm going to put out this newsletter or whatever for $1 a year and you get half your followers to sign up, it's $250,000 a year. Not a bad gig.
Yeah.
Just an idea.
We haven't even gotten to the whole Web3 thing, right? Like NFTs, that's another way to monetize, for creators to monetize. So
I'm starting to think Metaverse is more what?
Wait, I said Web3.
Well, Web3 and Metaverse are kind of synonymous, right?
Not real. I don't think so. Web3 is the decentralization of the internet from the corporations to the creators, like in terms of the monetization, right? Web3 is like, rather than like some company getting all the money flowing downstream, the money actually goes to the creators. It's not ad supported; it's user supported.
But where are these creators reaching the creators reaching the viewers?
So rather than like I'm just throwing a crazy idea. Rather than you go to like a website, any website, and that website is supported by advertising, right? I can be like, all right, I'm going to like stake this website. You know what I mean? Me and all my friends, all 4 of them, we're going to stake this website right now. We're going to take that risk. And the incentive is that we get the reward of that website growing. You know what I mean? That's like an approximate idea here of how Web3 like could work in theory.
Got it.
It's still early days, but yeah, I don't know. We could go on about this all day, but we have a lot of other things to get to. So drop us a like for Mark, because that was a great conversation. We're gonna have our next guest on in a couple minutes here. We're gonna pivot from memes and Web3 to a technology that's like a little bit more established, but not much, and that is natural language processing and machine learning. Our next guest that we'll bring on in a few minutes, Tony Trzeciak, built a tool that uses AI. You tell it what to do, tell it to find a stock for you, and it'll find that stock. It'll give you information about that stock. It's a pretty cool tool. And then, yes, GMGI. I said it off the top. They are coming on the show. Do not worry. Brian Goodman is going to join us at 12:45. Okay. Well, Brian Goodman, the CEO of Golden Matrix, on the show in about 20 minutes or so, 22 minutes or so. So do not worry about that. That'll be at 12:45. I promise.
Wait, what? To go back to Chamath for a second. So I know he issued an apology that he also got a lot of flack for.
The apology was
it was kind of one of those like non-apologies apologies. Did he ever put out like another apology?
I don't know. For those who are not in the know on this, Chamath Palihapitiya, big time investor, billionaire, former was early days at Facebook, launched a bunch of SPACs, right? He's also a minority owner of big basketball team, the Golden State Warriors. He made a comment on his podcast where he basically said that he didn't care about the genocide happening in China, and it wasn't so much like that he said it. Well, he said it, but it was also like how he said it. He said it so smugly.
Well, and his co-host was it David Sachs? Kind of like gave him, and he was like, wait.
I think it was Jason. I think. Jason
whatever his name is.
Kalinakis.
Kind of like gave him a chance to like like he wanted him to clarify what he meant when he said like no one cares, and then Chamath like doubled down on it.
Yeah,
but
he said it's below my line. It's below my line, which is just such a smug way.
Yeah, I mean, human rights issues should never be below anyone's line.
It's just such a smug way to go about it. So he apologized.
My friend. Well, I thought it was funny too because like I feel like this controversy kind of like sparked people to talk about this more again, and I was like, what?
Oh, the irony is rich.
I was like, what if this is like the domino that like gets like leaders to like actually act on this? Is now that people are talking about it again because of Chamath, and then Chamath saying he doesn't care, actually get some action on this. But one of my friends who like I guess had seen the Chamath stuff, but I didn't really. I know.
Yeah.
About like what's going on, the Uyghur, but I don't know. I'm not like an expert on it. So when my friend asked me about it, I told him, I was like, honestly, like I do not know enough about this to speak on it.
Yeah.
Which is something that we are all allowed to say about anything. So anytime, someone's like got something for you like that, like, oh, like, what do you think about the Uyghur genocide in China? Like, it's okay to say like, I don't know. I haven't like done my research. I'm not there doing my own reporting.
Yeah.
Like, I can't speak on it really.
Yeah, no. We should all say that more. Say, I don't know. I said earlier, I don't know what to do with DWAC. I don't know.
And then I did last night because I was curious, like was doing some more research on it. And I don't know. Well, actually, there's some promising. There were a couple politicians from the U.S. that essentially said like before the Olympics, China has to get, or the UN humanity report has to come out about what's going on there before like we'll participate in the Olympics or something. Who knows if that'll happen, but I could foresee that happening. People kind of boycotting the Beijing Olympics if there is no movement or anything.
Speaking of Olympics, that's in like 3 weeks, man. That's like right after the Super Bowl.
I know.
Oh, it's gonna be great. I'm sorry to pivot.
It's actually before the Super Bowl.
Oh, February 6th, I think.
Friday. Well, they always say it starts on like the 4th, but that weekend, and then it ends on the 20th.
I'm hyped. Who's hyped for the Olympics?
Do you like Summer Olympics or Winter Olympics more?
Very nice.
Where's our air horn?
Rohan took the air horn away from us.
Why'd you take the air horn away from us, Rohan? Thank you. I like winter more. I like Winter.
Yeah, I think the average event in the Winter Olympics is more exciting because you can just like turn it on and you'll get like the ski jump or like bobsledding or something that's like kind of fun to watch, and you get a lot of boring like track meet stuff in summer. But I think some of the best events are in this summer.
Like basketball, you mean?
Yeah, I'm trying to think what else.
I love skiing and I love short track, speed skating. So and curling. I'm all about that life.
Short track. Is that like Apollo Ono?
Yeah,
he was cool.
All about that life. Anyway, so hyped right now. Okay, let's do this. Before we bring on our next guest, we'll bring him on in like 2 minutes. Let's just do really quick our very first crypto update of the day and take stock on where things stand in crypto land. How far down are we is really the question. All right, where's my heat map? There is my heat map.
Heat map.
Bring it up on the screen. Oh, that's interesting. Huh. Really? What? Green? All right. Bitcoin green, ETH green. I guess this is it's a rolling 24-hour thing, so I guess that would be why. But still, like look at the 30-day performances. Ethereum down 19%, Bitcoin down 9%, Binance Coin down 8.5%, Cardano down up in the last month. Okay, I stand corrected. Yeah, I haven't bought any. I'll be doing some buying at the end of the month. Here, that's what I've sort of the plan I've set out for myself. But yeah, Bitcoin. It's been a rough go of it for the last couple months, no doubt. I'd almost rather Bitcoin and crypto at large. I'd almost rather there be a big flush than we get like a 4 or 5 month period of just chop. Because chop is what like sucks your soul. A quick flush, it's like ripping the Band-Aid off. You know what I mean? Just bring Bitcoin down to 30 and then rip it higher, 2 weeks later. That's cool. I'd prefer they rip the Band-Aid off. I'd prefer that, but I'm not the Bitcoin or the crypto czar. I'm not the crypto czar, but what I can do is I can get you some free Bitcoin. I can do that. Okay. Here's what you gotta do. You go to the Voyager app, you download it, you sign up using offer code ZING, Z-I-N-G, you fund your account with $100 or more, and you make a trade. It does not have to be your whole account. Actually, yeah, don't trade your whole account. I do what you want. I don't care. Make a trade, and then Voyager will send you $50 in Bitcoin for free, all for opening an account on their platform. Check it out, Voyager, offer code ZING. All right, it is 12:30 or so. Yes, it is just about. Let's do this. Let's bring on our next guest here. We're going to talk. Tony Trzeciak is. I hope I'm saying his name right. If not, he's going to have to correct me. And he's got a really cool app, and he's going to bring it up on the screen and tell us about it. It's called Dialect. Let's bring Tony on the show right now. Tony, what's going on, man?
How you doing?
Did I get your last name right?
It's Trzeciak. You're close enough.
Trzeciak. I'm sorry, Trzeciak.
All good.
So as I was saying before, you created this like natural language processing / machine learning / AI platform that does what exactly? So
in collaboration with Chata, which is their technology, they use conversational AI, natural language processing. I had an idea. I picked up my iPhone and I asked Siri a bunch of stock market related questions, and it wasn't retaining any information. So I had an idea. I'm like, how can I take my idea and make it into fruition? A partner of mine, Chris, he knew a guy, and we had a conversation. That conversation ended up creating this application that I will be demoing in a few minutes. And,
so yeah, if you can share your screen, that'd be great. It's Dialect. It's up on the screen. Dialect, and the URL is dialect.app.app. The link is in the description. I'll throw it in the chat as well. But like practically speaking, let's take a look at this thing, Tony. I'll bring up your screen now. Come on now, there we go. So like, show us how this thing actually works.
So using your native way of speaking, you can actually speak to our database with text or voice. Certain web browsers just do not allow voice, but I use Google Chrome and Internet Explorer. They allow you to literally physically enable voice activation to communicate with our database. So I'm just going to query a couple things to give your users some examples.
Yeah.
Largest trades today, AAPL.
So you're looking for the largest block trades in Apple today.
The largest volume options trades today. So you can actually communicate and ask questions pertaining to options, equity, and some technical analysis. As our database grows, you'll be able to enable more conversations with more data sets. So I'll do another one. What is the moving day average of AAPL? Date, but it's the algorithm should process that. It still did. And here's the chart. Here's the moving day averages for Apple. Now, as our database grows and more people use the system, the language model learns how people communicate with the technology, and it'll grow more and more robust as more and more people use it. But I could do a couple other ones. New opening trades over no open interest, premium above ask. Premium over, let's just say 1 million. So I'm asking multiple data points. It's going to process all the trades in our database, current and old, and it's going to highlight those trades. So the algorithm found that criteria trades and presented to that information. I'll do a couple other ones. Largest trades today, TSLA. Algorithm scanning the market.
So where is this data? Where is this data all coming from?
So we get our data from the CBOE, but what's really cool about this technology is that we can actually take this technology with Chata and train a language model around any database. So end users or clients can actually communicate with their database. So as of right now, we only have options and some equity and some technical analysis. Our goal is to work with other people and get their databases trained and enable access to conversate with those data points. So for instance, news, financial news, or price target analysts. There's so much that we can do with this technology. As time goes on, our database will become more robust, and clients and end users will be able to communicate with their data with ease, saving you time, and the convenience of just simply communicating with data and getting answers on demand very quickly. And that's important because the way the world is shifting, people want answers quickly, efficiently, and they want to get that call to action. The traditional way of looking for stock market data is going on somebody's dashboard and doing drill downs and, waiting for the trade to hit the tape. Or essentially, you can just use our application and technology and just communicate with the data. And when those criteria that you believe are relevant or important to take a trade or an investment, you can actually dynamically set that alert. So for instance, if I want to know anytime an equity block is taken over a certain amount, I want to know every single time somebody takes a $10 million trade in the equity, I could dynamically set that alert with just a few clicks using our technology. So it's really, really powerful, and it's really, really intuitive. So it enables the end users to really do, pretty much anything they want. Equity blocks over 10 million. So go ahead. Sorry.
Yeah, no. So I've got the URL up on the bottom of the screen there, scrolling across. So did you like this is like pretty advanced stuff, right? This is like AI, natural language processing. Like, do you have a background? Like, did you make that? Did you make this?
No. So this is again, I just had a conversation with the CEO of Chata through a partner of mine that we've created this together. I'm just a retail trader. I'm just like everybody else. Just to go on a little background story of me. I'm a paralyzed combat veteran. I was blown up in Afghanistan. And went through some really hard times. I got into some money. I wanted to, trade and invest on my own. So I ended up trading. I'm like everybody else. I was going from retail trading community to retail trading community. People with the retail boom, trading communities are getting bigger and bigger and larger. These are non-licensed financial advisors telling people what to do, what to buy, telling them financial advice when they don't even have the experience or education themselves, not falling into that same trap so many people do every single day of their lives. So I wanted to figure out a solution to help everyone make informed, data-driven decisions. So that's what led me to speaking with the team at Chata. And, we put all of our creative minds together and we created a system for traders by traders. And like I said, as more and more people use our system, the algorithm and the computer processing, it just becomes smarter. And it learns how people interact with our database. And we learn how people will ask these questions. And then that way, we get better answers, and it's data-driven answers. It's not somebody's biased opinion, it's data-driven answers. And to me, that is very, very important, because I don't care what, the guy to the left and to my right, their opinion on something. I want to know, based off of data, what I should be doing with my money. I want to make informed decisions. And one thing that I love about Benzinga is, I saw an interview on CNBC with Jason when he was sitting there talking to them and said, our goal at Benzinga is to help people make informed decisions, and using Dialect enables people to make data-driven decisions. And you take out the psychological factor out of it, and you stick to data. And to me, that's what's most important.
So, like, what is the universe here? The universe that you're covering, is it U.S. stocks or what?
So, I mean, again, my goals and ambitions are very large, of course, but currently, right now, it's just U.S.-based stock market data, options, and equity, and some technical analysis. And like I said, as our user case grows, our database grows, we'll be able to dynamically do more with the team at Chata. So it's really exciting stuff.
Got it. I mean, like, I think this is sweet, because I've never really used any, like, I've used Siri, but I've never used anything like voice to text for anything like market related. So, like, what are the other, like, how I want to put it, what are the other use cases? Or you said that, obviously the algorithm is always getting smarter the more it's used, right? But like aside from finding, I guess, like, what else could we find theoretically
through this application?
Yeah.
Okay, so so right now, if you go in our database and you didn't know what to ask the application, we have a drop-down box and things you can ask me. So, when I talk to people, I'm like, just look at this as like a financial search engine. If you don't know what to ask our application, we have suggestions that you can ask pertaining to trades, order flow, premium ratios, percent, volume, and open interest. And again, like I said, as our database grows, we'll be able to enable more people to explore more queries. So, I'm just going to click on a random one, trades. Okay, but what about trades? We're going to have a whole bunch of examples. But if you wanted to know more, you just go to this icon here, and you can type in any word that is relevant or important to, the stock market. So I'm just going to type in bullish. But what about bullish? The system's going to give you hundreds of examples of different things that you can ask regarding bullish. Let me type in premium. Okay, but what about premium? It's going to give you hundreds of examples of different things that you can ask. And these are questions that real live people are asking. And like I said, when people use the system, it's registering and remembering those questions, and it's going to retain that, and it's going to give that answer for anyone. So again, really powerful stuff. Equity, what about equity? You type in equity, and you're going to get tons of different examples to ask. So really, like I said, it's for traders by traders. It doesn't matter the skill level. Obviously, the more people we get on it, the more we learn how people would ask these questions, and dynamically we answer those for you. So, the future is bright for what we're doing, and the way the world is shifting. Everyone has a computer in their pocket. So it's like, right, it's on the go, answers on demand. Most people don't want to sit there and stare at computer screens and wait for these trades to hit the tape. And being in my situation, the most valuable thing on this earth is time. The less time that people have to sit there and stare at things, when they can dynamically just set their own criteria. And when they're alerted to something, that's your call to action. You spring up, you pick up your mobile broker, you open up your laptop, you're like, okay, I set myself, definitions alerts. I want to be, when these defined alerts happen, that's my call to action. I react upon that. So, there's a lot of noise out there. It's a very crowded space. There's so many people who are providing, some type of data flow, and it's your traditional drill downs, which again, we have dashboards, we have presets. You can create your own dashboard experience, you name it whatever you want. And you create your tiles, and you can literally, whatever data sets you want on your tiles, you can easily just query. I just want to know leaps. So this box is just going to show me leaps. I just want to see golden sweeps here, which is a multi-sweep over 1 million, and that's what's going to be there. And just lock it in, you save it, and you could set your own, your own experience, creating your own dynamic experience on our application. And again, like I said, you can create your own alerts, whatever you find relevant or important that happens in the market. You can define that, and you can set that alert. So new opening trades over no open interest. I want to know every single time this criteria happens, and just a few clicks, I can save that alert. And every single time it happens, I'm going to be notified. You just simply go to the alert that you queried, you name the alert. I'm just going to call it new open. And you have to specify a time frame, today, this week, this month, this year. But I want to be notified every single time it happens. So I'm just going to write today. I'm going to check the database to make sure it's going to pull that data set. It does. I want to be notified every single time it happens. I select my time zone. You can write an optional message, finish and save, and it's that simple. So every single time this criteria happens, I'm notified on my application because I find that relative or important to take a trade. Now, granted, you might not find that relative or important, or somebody else might not find that important, but that's what makes this system so powerful. You're able to come in here and dynamically set your own alerts. And again, just like the preset dashboards, we do have preset alerts that you can easily toggle on or off.
Awesome. All right. I would encourage everyone to check this out. The link is in the description. Again, dialect.app. Tony Trzeciak, thank you so much for coming on and sharing this with us. And we'll be keeping tabs on you and the app and how it's progressing. Have a good one, man.
Thank you. Thank you for the time. Have a good one, everyone.
All right. Hey, we're gonna have the man that you all are waiting for. I know why you all are here. All right, I see you in the chat. I think his name is it Brian? Is it Brian Goodman? Something golden?
Sounds right to me. Spencer.
Golden Matrix? Something like that. Does that ring a bell? That might ring a bell.
They just had a new movie come out, right?
Yeah, that's right. Yeah, so we're gonna have Brian Goodman on in a couple minutes here. But yeah, GMGI. That's right. Coming on. Real quick though, before we do that, can we just what am I doing right now with this DWAC?
Wait, what'd you buy it at?
88.
Oh,
what am I doing?
Sell it. You're already down 10%.
Why am I the way that I am?
Dude, this is gonna be $75 tomorrow. $60.
Don't tell me that. Pump it up, Aaron. Come on. Get your negativity out of here. I wanted you to say we're going to 90. Going to 100. No?
I'm not a buyer at DWAC.
What am I doing? Why did I do this to myself? I did this to myself.
I would.
I did this to myself.
They put out President's Day as the day the app's gonna come out.
Did they?
Yeah.
That's funny.
Is there a place I can just bet on that binary event? Will the Truth Social app be live on the App Store by February 21st or not?
I don't know, but it goes to my theory. Everything should be tradable.
Right.
Or bettable. Everything. Our next guest is actually, in a way, facilitating that.
I would say I would short DWAC into that day because I don't think they're going to. But for all we know, DWAC could be trading up 10% on the news that the app's not on the App Store. So I'm not going to do that. But if someone wants to just take that bet with me, a $20 Venmo bet.
Venmo Aaron. Don't worry, it's safe.
No, yeah. If the app is up on February 21st or before, I Venmo you $20. If it's not, you Venmo me $20. Simple.
Oh man. All right. Let's do this. Let's bring on Brian Goodman, Golden Matrix, GMGI, and just because we haven't done it yet today, let's give Brian the special intro. Brian Goodman, welcome to the jungle. How are we doing?
Yeah, pretty good. From Sydney, Australia.
Whoa, what time is it? I'm not good at math.
It is 4:45 a.m. See how keen I am to get on your show?
4:45 a.m. That's 8 hours before this guy wakes up.
Yeah, from sunny Australia. And looks like you got a bit of snow in the background there. I'm not sure what's going on.
We have an ice rink behind us. It's
All right, is that what it is?
yeah. The sun did come out for like a second. That's very rare for this time of year in Michigan. Anyway, Brian, let's just start with this. I was going through the site. I was looking at your recent press releases and news events, and you just came off what was it? Your 13th straight quarter of top line revenue growth. Was that right?
Yeah, it's pretty unusual for gaming companies, let me tell you, to show
So
a profit at all.
What? Yeah. What's behind that?
I guess our product's popular, but we run a conservative company, and our focus is on cash flow and positive cash flow and profitability. So we carry some products that are sought after, and I guess we'll chat maybe a little bit about what it's my view anyway, what makes or breaks a gaming business. And it sounds like it's a secret recipe of some sort, but it's a real basic situation in gaming. B2C I'm referring to in gaming. Basically, it depends on how much it costs you to acquire players, and in the longer term, how much you can generate from those players. And it sounds very simple, but at the end of the day, in the US right now, I'm guessing that a lot of these companies are spending upwards of $500 a player to acquire them, and they're getting maybe $300 if they're lucky out of these players. And the problem there is obviously when you've got a deficit and you're acquiring massive amounts of players, the losses become exponential. And then when you look at the burn rate, you get an idea of what's happening. Most of these businesses are highly scalable. So that's not the issue, because you can, whether you're hosting 100 players or 10 million players, the costs are not that different. But right now, I wouldn't like to second guess what these companies are up to, but they're probably vying for market share, and so at a huge cost, they're trying to get a foothold in this industry. So
you're going the other way, right? Like you're going not the B2C spend all your money on marketing model. You're going the B2B model.
Well, we provide the tools that change their world as well. So why they come to us, and I mean, that's how often people say to me, well, what makes you different from other systems? Well, the difference is in our loyalty systems, in our, they call it customer churn in the industry, whereas how long you can keep your customers and how much money you can, I say extract is a nasty word, but it's the industry, how much money you can get back from these players. And so our products provide these tools. So they artificial intelligence, loyalty tools, bonusing, free spins, all of these kind of things. Once you've paid all this money for a client, then you better ensure that you have these tools to get this money from these clients, because what you have is much more powerful than a land-based situation. You have a computer or whatever, an iPhone in somebody's living room, and you've got a lot of information on these people. So what happens is you use these tools to determine what the player's skill levels are, how long he spends in the casino, what he likes to play. All of these items are pieces of marketing that we provide in our system, and they're critical to survival. Because if you don't have them, then obviously that formula that I mentioned up front it goes the wrong way around, and you're pretty much in trouble. And so if you can turn the tables on it, and you say buying a customer for $300 and you're getting $1,000 from him, then the sky's the limit. You can just keep on buying players. And that's pretty much what happens there. On our recent acquisition, our B2C facing business, the business we acquired is pretty much, people may not realize, is about twice the size of our existing company. It had about $30 million in revenues and about $2.8 million in net profit before distribution of dividends, though. But it's got now we filed our pro formas right now, so I can talk to the numbers, but we have assets of now over $28 million and equity of more than $24 million. But this company, we acquire players at something around less than £1, and we can, we can get value from these players of upwards of £20. So, so when you look at the numbers from that point of view, it's a model that works really well, because we buy these players, continue to buy them, and we generate much more money from them than they cost us.
So there's a couple of questions. I mean, there's a lot of questions that are flying in from the chat, and one of them is just about that acquisition. So are you going to, this is from the Andy Whitelaw, are you planning on integrating R-Kings into the GMX system? I'll bring it up on the screen there.
So it's the other way around. We're taking R-Kings already, and we've actually integrated some of our technology, but we're continuing to develop their site to improve their business. And so we're already way ahead of the previous quarter since we took it over. We'll integrate our tools that I mentioned. We'll improve the company, and on top of that, we'll roll out versions of it globally. So we will continue to roll out this business around the world.
Got it. And on the acquisition front, I mean, the R-Kings just closed, I believe. Are you still on the hunt for more? Or are you?
We have some targets that we're working on, and we will certainly acquire more companies. Our strategy, and it's a well-known strategy going forward, is to acquire profitable cash flow, positive cash flow businesses that are accretive to what we do. So the businesses have cost savings, and they also add to our revenues and profitability.
So just some more questions from the chat. Dennis wants to know if you're targeting Mexico anytime soon.
I don't know if Dennis has been reading my emails, but we'll let the market know. But certainly, it's a market that we're seriously looking at, and it will be a licensed, a government licensed move.
Dennis, don't read Brian's emails. That would be very illegal. Okay, a couple more things, and there's some stuff in the chat that we will get to. I promise. One more just from my list here, Brian. Just like what is, now that the R-Kings acquisition closed? I guess, like, what is the next catalyst here?
So I guess the next catalyst, because we're acquiring these players at such an amazing rate. And we have so many of them. We've got 470,000 followers on social media, where we have thousands of new players every month that come into the system. We're going to monetize those players. Now we're going to offer them something else. So that something else could be a casino, could be a lottery, could be a bingo product. So we'll look for something, like I said, that's accretive, that can push those players to. So we have the technology. We now have a B2C facing business, and we'll continue now to create economies of scale. And like I say, when you scale these kind of businesses, you can scale to any level. It doesn't matter if we've got 1 million simultaneous players on our system. It's really similar costs to us.
Joshua wants to know about your plan to accept crypto on any of your platforms, or is that?
Yeah, we considered it, and once we have a casino facing product, if that's what we buy, there'll be consideration to crypto as a form of payment. The problem with crypto in the gaming industry is that we've got to, I suppose, be a little careful, because its optics, may not be that good for us. But once we have a product that can actually utilize the crypto, then that's something we would move towards. We have the capability.
And let's get to the big one. The question that I see is asked 20 freaking times in the last hour. You know it's coming. I know it's coming. We'll know it's coming. Is there any update on an uplist? Anything you're legally allowed to say about that?
Well, we put out in one of our recent brochures that for our year-end results, that the reason we changed our financial year is because we had agreed with NASDAQ that this item would. I'm trying to be really careful here because it's not done till it's done. But there was a reason for us changing our financial year, and we're confident that in the short term that we'll make that move. So hopefully next time I come on the show, we'll be able to talk to that.
But the application is still in process. And
yes. So I mean, there were a couple of items that we needed to address, and there was a lot of rumor about us withdrawing our application, whatever. But that's certainly not the case, and it's. I don't want to read too much into it, but obviously we wouldn't have gone through this process if we weren't close to it. We've, as I said, we've now changed our whole financial year, and that's what it's about.
It's a very sensitive issue. Whenever I talk to someone in your position, right, someone who's the CEO of a company that trades in the U.S. On the OTC markets, and the uplist, to the best of my knowledge, I've done some speaking to people about this, and it's just like the exchanges, frankly, they get a lot of applications, and they are not always the best. I mean, they're not the best, frankly, at like being transparent about the process and how long it takes. And I know even someone like Brian, to give you the benefit of the doubt, Brian, you probably don't even really know. I mean, maybe you do. I don't know. You just can't tell me. But like other executives I've spoken to have said, like, I don't even know. Like they don't even tell me anything. So I don't know where you stand on that, but it's a bit of a delicate process. So I'm sympathetic to that fact. I know that's what everyone wants to know, right? But there's only so much I can say.
And we're respectful of it. We qualified to uplist a long time ago, based on it's not as if we had to qualify in terms of net asset value or something. We've qualified based on our profitability and size of the company. We're respectful of the fact that there's been a lot of SPACs and whatever else is going on in the marketplace, and maybe in the scheme of things, we're in line.
Brian Goodman is the CEO of Golden Matrix. The ticker is GMGI, coming to us live at like 4 a.m. from Sydney, Australia. So, Brian, thanks a lot for staying up. I don't know if you stayed up late or you woke up early. Whatever you did, thanks for doing that. We appreciate that. And
thanks for having me, and hopefully we'll be back soon, or I'll be back.
All right.
Soon.
And hopefully next, here's what we'll do, Brian. Next time, because we had you on, I think it was in the fall, it may have been the summer. I don't even remember. Time is a circle, but like when the uplist happens, get back on.
I'm on.
That's what we'll do.
It's a promise. Talk to you soon.
All right. Have a good one. Hey, I hope I was able to ask questions in the chat. That's kind of half of the thing here, right? Is we do this as much for you as we do for us. Thanks to all the people who ask questions. If you want to pay it forward, you can do that just by hitting the like button. We'd appreciate that. Thank you very much. Thanks to Brian again. Guys, 4 a.m. You know what I mean? Appreciate that. I wouldn't wake up at 4 a.m. for anyone. Maybe you, Aaron.
Well, thank you, Spencer.
But most people I will.
Next time I need a 4 a.m. airport ride, I'll let you know.
Okay. I mean, I typically take 6, 7 a.m. flights. I'm up at 4 a.m. to catch those things. I saw in the chat and also in our office, I saw SoFi got some love on social media on CNBC. So that's always fun. I don't know what the stock is doing and what Kramer said they're going to have SoFi on Mad Money tonight. So I'm not confident in any SoFi gains today. It's just the way the market is right now. But there's more to it than that. If you missed my entire discussion about SoFi, rewind the stream like an hour. We talked about that for like 20 minutes. We're up to 14. Big whoop. It's not about 14. It's about 40. Just kidding. I can't even say that with this. I don't know if we'll ever get there, frankly. But again, long-term story. Know your time horizons. Time horizons matter. All right, let's do this. It is 1:00. Let's bring on Nic Chahine. He runs the Benzinga Options Inner Circle. If you have any options questions, any trades you're looking at, any trades you're thinking about making, any trades that you made and you regret horribly, like I did with DWAC, I'm afraid to look at it, frankly. Nick's your guy. So let's bring Nic on the show. And he can. What's my target? It's not about a price target. It's about the fundamental story. I don't know. I don't have a target. Sorry. Nic Chahine, what's up, man?
Just answering questions. When the market takes a tumble consistently like this, then you get a lot of questions. I'm stuck in a credit put spread, or I'm stuck in long calls that are not worth much. What should I do? So today I had some pretty interesting questions. So
really.
Yeah, somebody had bought a call on Amazon at 33.30, and it was a lot of money, and now it's a lot less money, and they still want to stay in it. The delta is still decent for it. It's out in March, so they have time. Going into an earnings is not crazy, but they're down on it. So I suggested that they sell covered calls against it for this week and next week, and then the week thereafter would be earnings. So then it's up to them whether they want to do that or hold it or whatever. So at least they can recover maybe 1,000, maybe 2,000 out of selling the covered calls. So, there are some things you can do. Somebody else was stuck in an upstart. They bought it somewhere on the way down, halfway. So they're way underwater. And the calls were, unlike the Amazon situation, they were dead. The delta is in the single digits, if not, so it's pretty low. So let's say there's $1,000 left. I would rather take that $1,000 and redeploy it lower where it has a better odds of success. Not increase the risk, just change it to where at least you have reasonable expectations to recover some money. So you just have to be unemotional about it. That's where we make most of our mistakes. We get emotional about it. Your reaction to DWAC here, I'm afraid to check.
afraid to look. I'm not that afraid. I'm like only half afraid. Wait, but Nic, I have just a broader question for you. How does your strategy change in a uptrending market like we're in, at least in the broad-based indexes, to the one we've been in for the last 3 months, which is just chop? Does that obviously changes the equation?
It's very tricky because it's not even chop. The S&P made highs not too long ago. The small caps is falling out of control. So
the Russell is disgusting right now.
Right. So the small caps, because the way they rallied, we're paying the price. And unfortunately, good companies are paying the price. I disagree with SOFI. It's a good company. So it's a matter of, I wrote an article recently and I called them small crap. And I didn't think they were going to publish it, and they did. So the small cap is a small crap now because in it is all the crap stocks that rallied out of the pandemic. So it is. That's the backside of the incredible rally in the pandemic. And at what point will the bulls figure out that some of these stocks are never going back?
I mean, I think we're a little bit. I think we're a little bit past that. I think people.
I mean, if you look at this IWM chart, right, you can see that rally from COVID, the COVID crash, like you're talking about. But
I'll zoom out.
At that same time, everything was rallying. I mean, if you look at Nasdaq, you look at SPY, it all looks like that.
I understand, but when you rally and your company has no income, like all the EV companies, they have no income.
Right.
It's different than when Amazon doubled its revenue and bottom line.
So I think Nikola made like 30 grand once. So there is some revenue coming in the door.
More than I made.
I think Trevor Milton paid Nikola to install solar panels. So honestly,
I wasn't speaking of Nikola. I was talking about, say, Hyliion and whatever the other Ride, and even FSR and Lucid to a degree. But now they're stepping up and delivering. So that changes. So these guys have a future, but it depends on how much of that. Most of the price in the stock now is based on future expectations. So it's up to the management to step up to the plate and deliver. So that's a tricky balance. So here's what I'm going to tell you on the IWM. So you've been trading for a while. I've never seen one index correct and the others rally or not correct. So the IWM has corrected officially, down 15% yesterday from its all-time highs. The S&P just broke into a high recently. So if the weekly candle in the IWM closes where it is or slightly lower, I would be seriously worried about the whole market, because then we were probably going to go to 180 in the IWM. And if that happens, technically, I doubt the S&P is not going to fail. But the setup is so bearishly easy. Like if you look, I kid you not, I looked at dozens of mega cap stocks. All of them have head and shoulders with 2 warning signs. Today, Apple fired one of them. I think both of them. Netflix already priced most of its. Amazon is already below its neckline in the head and shoulders. Every other company I look at, Facebook, Google, the Qs, they're all teetering above a neckline that would bring about, 8 to 12% correction. So if the IWM weekly candle closes below that, I will position myself to take advantage of that. And how do you trade this? You don't chase. You don't chase. Right now, the method is they're selling pops. So if you buy the pop, you're doing the exact opposite of what you should do. On drops, you can buy it, but you recognize that the pop is going to be sold, so you exit. Like this morning's note to my people was, don't chase the pop. So I had longs from overnight, and I had it popped, and I used the pop to exit in the Qs immediately. So it went. My calls went from 50 cents to 5 cents as soon as I closed them. So if somebody didn't listen and they stayed hoping for a better rally, they made a mistake. Like right now, I'm sniping 2 breakouts. One played out. We got 20% on the SPY, and I'm sniping the second leg of it from the SPY and the setup on the IWM. Let's see if it happens. The problem is the bulls are not taking the steps. Like earlier today, they had an easy breakout. VXX fear was at its lows. It's saying, hey, I don't want anything today. And then the bulls said, no, I think we'll go back to the lows and see what happens. For no reason. It was like right now, there's nothing standing in the way of 458.24. That's what they need to just break out a second leg. Then they can get to 460. But they're just not doing anything. The VXX is at its lows. Today, yields are breaking. That's what was scaring people yesterday. So there's no reason why 458.25 is failing. Take 458.25 out, you're going to have a burst. So I don't understand. This is like 1 minute charts if you want to see that, what I'm talking about.
Do you want to share your charts? It's probably better than.
Sure. I'll share my screen. 1 second.
Yeah. And then we can look at we can see what you're seeing and not so much what I'm seeing.
Why is it not popping up? Share. There we go.
I don't know.
Share screen. Share screen.
Super SPAC man. I mean, yeah, that's a thought, right? You find the companies with, but betting on a management change as your turnaround catalyst, there are maybe better signals than that, but it's not a terrible thought. The logic is there somewhat.
There.
Wow, these charts are busy. Okay, so we got this.
Wait. I'll talk you through it.
Yeah. Okay. So this is SPY.
The first setup. This is S&P 1 minute. The first setup was here. It took a bit to play out, but it did. The second setup had multiple necklines. So now the fail was here, 458.20 something, that candle right there. They had it. VXX was the lows of the day, and then they go back to the base. Why? There's nothing standing in the bull's way except their own mind. There's no leadership. Apple is down 0.5%. There's no leadership. There's no leadership from the financial leaders, like the Fed. Instead of coming out and yakking, oh, we need to raise whatever. How about tell us if you're going to be combative or friendly? That's all the markets wants to know. Just the Fed needs to come out and say, hey, we are going to tighten rates, but we're not going to break this machine on purpose. We spent $5 trillion to inflate it. We're not going to break it on purpose. That's all they need to do. That's it. And then Wall Street would be fine. We've been through rate hikes before. So this is the setup. Now, if the SPY takes that candle out, it has immediate resistance, but that's the second leg. And you can get to 460 today with a lot of resistances in the way, like 1, 2, and of course that trigger there. Nothing standing in their way, higher lows. And the VXX, this one, fear, is at its lows of the day. That's today. And they just drew some sort of a head and shoulders. So if they lose that little candle right there, fear should capitulate. But these guys are not showing the gumption to do it, but it's doable. And there is an expiration contract for today, and it's probably 30 cents to play that 460. So that would be an active trade today. So somebody said, how do you do that? I can't trade this fast. Well, practice. See, these trades, you're not at the mercy of the overnight headline. So you buy calls and then something happens overnight and you wake up to a big loss. You can't do anything about it. Here, you spend a little bit of money and you stop out fast. You either lose a little bit or you get a good run. So, and the IWM, earlier somebody said, how do I play it? I said, well, right here, there's no entry in the IWM. You're stuck in the middle. Whoops. So this is a 5-minute chart. It was right here. So I said two things. There's the trigger. You either wait for the breakout and you chase it, or you wait for the fade. And I said between this point, this one, and that point, there's an entry. So you buy the dip on the thesis of support, and you wait to see if you get that. Or you chase the rip on the breakout. You don't buy it right in the middle. Then you get stopped out here and you see it do that, and that sucks. So yeah. There's no reason why the IWM should lose this area. None. But they haven't shown any gumption. The bulls are beating themselves up. They have an easy breakout, an hour, and they're not doing anything with it. And look at this guy. This guy is wanting to break down, but they're not going to do it while the bulls are still hanging and being so lazy. So under normal circumstances, I'd say this is a bear trap. Like they're playing possum. They sit and sit and sit and sit, boom, punch it. But when you're getting beaten down for days, it's not an obvious conclusion. So I am long, I am profitable, and I'm waiting to close it or not. And that's the active trade. Now, overall, you can't trust much. You mentioned SOFI. I think I have it here somewhere. Let's go to
Wait, I'm sorry, just to clarify, you're long the IWM.
SPY.
Oh, okay.
Right now, for today's contracts at the money. I own calls close to the money. And if we get a burst, if this materializes, then I think we should see 460 today. I mean, that's $3 up from here. The problem is, I don't think today's contracts, they have a contract that expires today. They're skipping dollars. Like there's 458 and then 60. So there are two legs missing. Like 457 and 459, I think, are missing, which is weird. So you're stuck buying $1 or 20 cents. So 20 cents, I would call that a lottery ticket. Like what happens if I buy it for 20 cents and the price bursts in the next hour or two, that 20 cents turns into dollars. Long shot because it's got a very low delta. But if you're waiting for the trigger, maybe you see something that most of the market doesn't. So this is a 1-minute chart. And when I'm trading that fast, I use 30 seconds and 15 seconds too.
Wow, okay, that's crazy. I can never do
because
that.
That's the advantage you would have over most other people. So you have to control your emotions though. So now you can see clearly that there's 458.06. You can see 458.23. If you put it on 1-minute candle, you probably won't see these details. So when you're actively trading, you should have at least 2 or 4 time frames. Very, very short, medium, and longer. So I have 15 seconds, 30 seconds, 1 minute, and 5 minute if I'm in an active trade like now. It just gives you how the market is positioned. And also if you add Bollinger Bands. So I'm not a big expert, but if I put it on 4 different time frames and you see them squeeze, it tells you that, okay, something can happen now. If they're all wide, then whatever is going on is going to continue go on. Don't expect much. So if we were rising, don't expect much to come down because no one's tight about it. So here we go. What I want is for this guy to die right here on the VXX, so this one can take off that 0.25, whatever it is. And they don't do it. There's nothing standing in their way. This is the TNX, basically. This is yields. It's falling. They have a very, very easy bump that would give them $1, and they won't take it. That's very annoying short term. Now, if you want to talk long term, I told you my sentiment. I'm watching the small caps because you guys are on the money with that. Horrible price action. And they've been going sideways. You showed your chart on the small caps. They were going sideways for a year.
Not great.
On the weekly chart, if I go to a weekly chart and take out all the noise. So rally from here to here, you chop for a year and then you lose it. Then what happens? Then you're going to have the opposite of this one down here to find footing. They have a base inside this candle somewhere. They have a big gap down here. Where's the pandemic? So that's June. So that's right here. So that's not good when you lose a year's worth of chop and you put it above you. So then if you pop into 214, you expect sellers. So the way I would trade then, I would do iron condors. I would sell below support, credit put spreads, and it pops, I would sell credit call spreads on the IWM. And then I would think these guys would follow as well. But my thesis this week, my optimism lies from a stupid logic. It is so easy. The bearish setup is so easy that I don't think it'll happen. But it's happening. So that's definitely not the...
It's so easy. You think everyone's getting on the same side of the seesaw?
I think if everybody's watching the road, we're not going to crash. That's probably the best way of saying it. I'm going to show you Apple to tell you what setup I'm talking about. So take out all the lines, go to a daily chart, and I'll show you. All right. So you've heard of Head and Shoulders. Look at this bad boy.
I use that shampoo every day. What do we get?
Yeah. So today, this needed to hold. It fired. So they're above it now. So they poked below warning 1. They poked below warning 2. Now the idea is if you close below the neckline, so wherever you draw the line, the bottom line is if Apple loses footing from these two, it's going to like 157. And every stock you look at from the mega caps has the same scenario. Look, shoulder, head, it's drawing the right shoulder. Warning 1, warning 2. QQQ. Shoulder, head, but they have a little better situation. They needed to hold this guy. They didn't. So now it's an inverse cup and handle that brings these two warnings into spot. So if you lose 355 on the Qs, let's just say we do, and then 350 below it, we're going to here, most likely. Now this is like 3 steps ahead. They still haven't lost this one. They poked it today. They stayed above it. So the trick is, what happens on the pop? What happens on the pop? So the battle is lower highs trying to hold the floor. Maybe Netflix earnings reaction is good. Then it helps the case for everything. But every stock I look at looks like this. Facebook.
I know that's almost the comedy of the situation. Is every chart, not every chart, but a lot of them.
Yeah, no, all of them. This is Amazon. Here's the Head and Shoulders that Amazon already triggered. Netflix has almost finished its Head and Shoulders. It's the first one right there. You can see it. Giant shoulder, head, shoulder. The target I had for it when it first lost it was 520 to 485, 490. So it's right here into support below it. Unfortunately, that's where I would get long. I did via credit put spread, but now it's played out. The earnings reaction is a crapshoot. So maybe they freak out and then I'll get long down here. I say maybe because nobody knows how they're going to react, regardless.
All right, there are some questions from the chat. I see them. I'm not ignoring you. Let's look at SoFi real quick, Nick, and then we'll go to the chat. Some stuff that they have.
Okay, so this is the daily chart. I like the company. I like what they do. I like the front. They have 2 fronts. Their model, their business model. They talk to the consumer. They do business deals behind the scenes with the merchants and stuff. So I do like what they're doing. What I don't like is that they lost significant support. So they need to get back above 15 for me to be comfortable with it. And indeed above 16.5. Because like I said, with the small caps, what happens on the bounce? So this is the behavior. So when this is going on, I have something I call upticks. So as a bull of the stock, you cannot trust pops. You can't trust the upticks. They're being smacked. This is a pop, they sold it. This is a pop, they sold it. If it pops, they're going to sell it. So the problem is you need to set a floor, and they just lost all the floors, and now we're looking into like its first few days of existence.
I know.
So now
Man,
you go
doesn't look
to-
great.
It doesn't look great, but fundamentally, it's a good concept. And I think that they don't. The problem is, I don't think they have enough history, right? Like the P&L, if you look at it, there's not a lot of history.
Yeah,
So
you're
you
right.
go to quarterly, you want something to lean on. So it had 259, 290, trailing 12 months is 550, but there's not enough for a professional investor to go like the passive money. Those big guys, they can't take a flyer on it. So it comes down to you and me and smaller funds,
Probably right.
and so it doesn't have a lot of fundamental support from that perspective, a metric fundamental support. But then you look at a firm, same scenario, great concept. That's a long down here. But you can't when they're selling the small craps down. So you lean on what? Yesterday I said Nike looks good. It looked good earlier. It was up. Lilly, I bought calls in Lilly yesterday. Those are up. But you have to be aware from the pop and then head and shoulders drawing, warning 1, warning 2, becoming a theme. So if I like, but if I'm long, I don't add. If I want to get long, I'll go long in a way where I leave room for error. So if you know how to sell puts, instead of buying shares here, why not sell puts in the single digits? So then you break even under $10. That's not a bad situation to be in.
It does look like we're getting a little pop on Facebook right now.
Yeah.
I don't know if there's news or what, but Facebook looks like it's breaking the trend of other.
So Facebook showed gumption earlier, right there. And I said we need leadership. Apple took its stance right out of the gate. And
Instagram,
now
sorry to interrupt. Instagram is launching subscriptions.
Oh. Wow. So
interesting.
Subscription.
I don't know how that will work, but I mean, my long-term view on Facebook, why I'm bullish, doesn't really have anything to do with Instagram or Facebook. It's more related.
It's all Mark Zuckerberg, right?
Yeah, it's because Zuck is my Lord and Savior. No, I think they are right now the leader in terms of AR, VR, getting a console out there that's practical that people can use. And from a value standpoint, I mean, it's not really overvalued right now, I don't believe, compared to other. I mean, it's PEs like.
When in doubt,
I had a debate. You're absolutely on them. So I had a debate. I said, why is everybody suddenly so bearish markets now? Nothing has changed from last year. Zero.
Me too.
Last year, we knew the QE was ending. We knew the taper was coming. We knew rate hikes were coming. We knew inflation was there. They said valuations are crazy. I said, where is the crazy valuation? Show me what's
not in Facebook. It is
Tesla.
It's reasonable.
There were some, and that's what I think is what's healthy about this drawback is that a lot of it, to me, are just kind of valuations coming back to earth a little bit.
So here's Facebook, 22 PE with 8 times sales. That's not crazy.
Incredible.
That is a cheap company that grows fast. Amazon is 3.8 times sales. It's even cheaper. They don't even get credit for 4 years worth of sales in their stock price right now. The PE might be higher, but who cares? It's Amazon, for crying out loud. So Tesla is like 24, maybe something like that, to give you a gauge. Microsoft and Google are somewhere around here, maybe a little bit higher, a little bit lower. So they're not crazy. The valuations are not crazy. The stock price is inflated so fast, so it freaks people out. So it gives perception it's so expensive. No, the stock price is high. We have inflation by design. The Fed, by design, caused the inflation. And now they're freaking out that it's high. Why don't they let it run hot? So they're protecting the consumer from inflation, right? Isn't that their goal? First, give everybody a job. So they threw trillions of dollars into the economy. And now they're complaining about it. Oh, it's too hot. Well, you threw $7 trillion. Of course it's too hot. Why don't you let it run hot? And don't raise rates, sell assets. I'm not an economist, but I'm thinking if you sell assets, you take money out of the bank's hands. Don't make it more expensive for me to borrow. Make less funds available for me to borrow. So if you're trying to protect me from higher prices, don't make it higher for me to own my house and own my car. Make it so I can't get a loan as easily as I would have before. So then I get picky as to what I want to buy. That's my thought, but I'm not a Fed expert, and the Fed should come out and say something. So you know the news. I mean, you guys in Benzinga are all about news. So somebody at JP Morgan said they were expecting 9 rate hikes this year.
No, they did not. 9?
I'm telling you what I heard.
There's not even 9 Fed meetings, I think. That's more than one hike per meeting.
There's one a month. There's one a month. So that means they have to finish the taper now and start raising rates in the next 2 months and raise once a month every month.
Dear Lord,
So
9.
There
There ain't no way we're getting to 9. The market would have a conniption.
That's right. So we're having a conniption. We're having the conniption right now. So if that's true, somebody Google it. If that's true,
I'll figure this out right now.
If that's true, then the Fed heads, instead of coming out and yakking politically, they should come out and say, "Hey, we're
7.
raise rates.
Jamie? It was Jamie Dimon. He said 6 or 7. Let's just clarify things.
That guy should just shut the fuck up and get the fuck out of here."
Okay, I'll pass the message along, Nick. Yeah, he said. I guess. Yeah, he said
he's got a broken calculator and apparently a broken calendar as well, because he says Bitcoin does not hold value very well. Well, if it doesn't, then nothing else does, because it beat everything else for a decade. So I don't know where he gets his math from. That's the leader of the biggest bank in the world. Well, the cream of the crop, ex-leader. So if somebody like that says something that inflammatory, I think the responsibility is on the Fed to come out and say, no, that's crazy talk. Because if you remember, was it in October 2018, Powell said we're on cruise control with rate hikes? And we had the crash.
Maybe,
We had the crash into Christmas. We crashed into Christmas, and then he had to say, okay, I'll restart the QE. So the U.S. economy, I think, is 2/3 consumer spending, like 70% maybe. So how rich we feel depends a lot on the stock market. That's why they baby the stock market. So they will baby the stock market, and maybe the stock market will bring them to its knees and say, hey, if you're thinking about raising rates, let me show you. Whoop, come down 20%. They won't raise rates.
Nick, someone asked you to take a look at Roblox for them. Who was that?
Elon.
It was Elon.
It was Elon.
It was E space L space O space and
My buddy Elon Musk is here.
Yeah, he wants to know about Roblox.
Okay, so not to talk fundamentals. When a stock comes back to the starting point, it should find buyers. Today they showed a little too eager. Why poke below this one? They closed the gap, so I'm wondering why they went below the base. So between here and here, there should be buyers. Now the risk is, if it bounces here, it also should see sellers. So somewhere between, on the bounce, if it comes between 84 and 88, there should be an effort to sell it. So pay attention as to what happens on the dip. So if they sell it, and they should sell it, they need to make higher lows to come to blows here somewhere and try to snap out of this descending channel. Otherwise, you risk coming back to here, triggering this one, and then I won't tell you where it goes with a lot of support. So what happens on the bounce if the bounce comes? That's important. If I'm long, I don't add. If I got long here and my calls are toast, if I bought calls and now they're like a delta of 0.1, I should take the money out and redeploy it down here. Not more money, just different money, to have a chance that if I get a pop, I'm immediately participating. And look at that. They just puked it all out.
Oh, boy. Funny.
So they're back to the base, which is not a deal breaker, but there was no reason for it. There was nothing threatening. TNX was low. VXX at its low as the day. And the bull says, nope, I'm out of here.
Any questions for Nick? We have some more time, but not that much more time. So now is your chance, and then I'm going to also tell you how you can get more Nic Chahine in your life. Let's do. Oh, that's not
We have
one that
I have 200 people. 100 now. It was 204 earlier. I have 193 people watching what you guys are watching. So they're
Well,
wondering.
I'm curious. Or go ahead,
They're
Nick.
wondering
Sorry.
what the hell is going on here. I'm jumping from window to window, and they can't hear me talk.
Yeah. I'm curious your thoughts on this stock right now. I've been seeing a lot of people asking about it on Twitter and whatnot today as a potential short squeeze candidate. Smile Direct Club, SDC. This might fit in your small crap or whatever you were calling it earlier.
Yeah, small crap.
Dude.
Yeah. Yeah.
direct to consumer, more like direct to zero. Hey,
Oh
I'll
my
be
God.
here all
Yeah.
week.
This is not a stock I usually mess with. So if you want to know, I mean, this is your best bet is to get with the posse that does this stuff, which is WSB probably. So
Okay.
I literally, well, you can bet. So if you want to, if you think it's going to spike, I don't know if it has options or not. I don't know if they're liquid or not. You take a position on a dip into a base, and you decide, okay, this is lottery ticket, and you hold it. And if you get this pop, you exit at X%. You set the goal in your head. You don't ride it up and then down because it doesn't give you much time. So you say, okay, if I get 20%, 30%, I'm out. And then if you say, if I'm down 10%, I'm out. So you set your entry. Once you take the position, you set your exit strategy right away. This way, you're not stuck burned. And when you define the trade as speculative / lottery ticket, then you don't take the nest egg risk. You say, okay, this is my mad money for today, and if you get a pop, fine. So I can tell you that you can probably pick it up. 220 matters. So if it was me, I would buy a breakout of 220, expecting resistance at 225, and a second leg higher if they take that out. Or you buy the dip into anywhere close to 2.05, and you hope for the best. And if it goes below this, out. So that would be the trade way to think about a speculative stock like that. I can't tell you if it's going to be squeezed or not. I mean, it's $2 for crying out loud. How much are the premiums on options?
Exactly. The stock is a call option right now.
Right. So if you somewhat believe in the company, you're probably better off to play the stock itself too. But then that makes it more of a, I mean, options are leveraged if you catch it. So you can get out in 30 seconds if you wanted, or 2 minutes. But if you do with the stock, you have to risk a lot more to make the same kind of returns. I don't know. It's a matter of preference. But from the chart itself, this is the line. And you can see it mattered before.
Okay, but before I forget, I have some links I want to share. So, and let me make sure I'm sharing the right ones. If you want to join Nic Chahine's Options Inner Circle on Benzinga Pro, here is what you do. You go to the link. I'm going to put the link in the chat. Don't worry, I will put it in the description as well. There's so many links to get here. Okay, I got it. I'm going to highlight it. This is the link. It's going in the chat. This link will get you there it is. Finally. Come on, chat. There we go. There is the link. Okay. That link will get you 25% off a Benzinga Pro subscription, plus with the add-on of Nic Chahine's options mentorship. Okay.
So what that includes are these 4 windows every day, all day. So if you want to learn active trading, we do this all day. We also have the chat room going on, the Benzinga Pro platform. We're chatting there on slower concepts, discussions, which is what I like to do. You get pre-morning write-up from me, midday write-up. Like yesterday, I had a video with 3 trades in it, trade setups, nothing urgent, just trade setups. Sunday, 2-hour webinar. On last Sunday was 147 tickers. I share a spreadsheet with links to all those tickers and comments. Let's see, a weekly 10-minute strategy video. This week it was 8 minutes, and there she goes. So there's tons of value. Whatever they're charging, not nearly enough, but I'll take it.
I'm going to pin the link. It's in the description. It's in the chat, and I'm gonna pin the link to the top of the chat. Okay, right now I'm making it as easy as I possibly can for all y'all to find this thing.
Just for example, today we caught a run up. Yesterday we had 2. Friday we had 2. Thursday we had 3, of which I messed up 1. And by the way, one of them was JD, which I picked up from one of your shows. You guys were watching JD, so then I left the show and I was like, wait a minute, that looks good. And we played it later in the day, and it delivered. So, it looks like it's costly, but anytime you need something, you can pop in and we chat all day. I'm in there all day, every day. I'm not waiting for you to say something, but if you post something, I will get to it right away, or as soon as I get to it. And these windows are open all day. And I bought this mic recently just for that purpose, so I don't have to wear a headset all day.
So again, link on screen, link in chat, link in description. Nick joins us every single Wednesday. I don't even know what day is today.
Wednesday.
Yeah, because the Monday is throwing me off, the holiday. So today is Wednesday, and Nick hangs out with us. But if you want like Nick all day, right, and not just for this little block of time on this show, then you're gonna have to pay for it, frankly.
It's a very small cost given the education you get. I mean, the chart lessons every day those are not my words. You can. I wish I brought the comments. Fewer mistakes. If you're stuck in trouble, we can all help. There literally are 193 right now in the room. So there are that many watch lists in there. Somebody jumps in and is like, this is moving, that is moving, and we see if we can jump on it. That's why I keep adding windows. So somebody today asked me, what about Trade Desk? Well, I had put an arrow down and stays exactly at the arrow that I put.
I haven't looked at Trade Desk for a while.
Right, and it's behaving very well, appropriately. Like I saw it coming, and I drew the lines, and that was my downside scenario, and this is where they're at today. I said it's into support. Warning 1, warning 2, starting to sound familiar. So if you bounce here and you come back and you lose support, you go into the 48 area. That's not my forecast, but that's an alert. So I'm going to put it right now because it fired today, and I'm going to reset it and say, warning, DEFCON 2.
Nick, before we let you go, I would love to hear your thoughts on Netflix because they report earnings tomorrow.
So the reaction to the earnings is a coin flip. The Netflix is close to its target when it broke down from Head and Shoulders. So if I'm long, earnings aside, I'm comfortable that I am in a good base. I'm not chasing up. I'm into support. Now, I can't guarantee you they won't react badly to the headlines because it's all about human emotions on the day after the earnings. So it's not about the numbers. The numbers matter long term. It's about what people expect. So if I'm expecting a really bad number and the number comes out somewhat bad, I'm relief pop. So it's all about expectations. The CEO themselves can't tell you how it's going to react. And I could prove it to you mathematically, but we don't have time for that. The simple logic is every report from all the mega caps, let's pick Apple and Facebook and Microsoft. They haven't had a bad report in years. Why isn't every earnings reaction up blind? Why isn't always up after the earnings? Because it's not about the numbers. It's about sentiment, the human element. So Netflix, from a chart perspective, should have a base here or lower. You lose this base, you're going much lower, but I think that would need the whole market. So my focus this week was, other than the small caps as usual, what would WWND? What would Netflix do? So we'll see what it does on Friday. They report Thursday, right? Thursday night.
Yeah, that's Thursday night. Yep.
So check out this tick right there. This is a daily chart. So make note of this line, and if you don't believe in charts, look left. From this point on, look left and how pivotal that line was. This doji, complete indecision at 554. Look how pivotal it was here, the base for this rally, and the fail here. And look, it cuts across the whole shebang. So that is an important candle to note, and I will note it right now.
See that? Ideas. They come from everywhere, all directions, at all times. Nic Chahine, he runs the Benzinga Pro options inner circle. I guess that's what it's called. I'm not up on the latest parlance.
Inner posse, whatever it is.
Inner posse. Oh wait, hold on. Young Money. I'm sorry. Young Money wants Disney.
Disney. I haven't looked at Disney in a while, so that'll be interesting. Let's go here. What was here? I stole something from here. I have to put it back.
Netflix. What?
No, here, Disney. Wait. Okay, so gaps that are this big are very difficult to start. So if you want to get long to capture the gap, I wouldn't venture in until it breaks through 153.20. And even then, be careful of the fake out. So ideally, the breakouts is they go above, and ideally, you want to come back down and test it. So if they break through and you're too late and it gets to here, I would wait a little bit to see if they come back and test it. Then you can try. These are pretty big gaps. Higher lows, that's good. So you have higher lows attacking a neckline. But what's left of here? I don't know. So that is also a warning right here. So we'll have to zoom out to see what's left of here. So that's also a warning. What is this? This is 15 minutes. Okay, so let's go to a daily. Yikes. Okay, so you do not want to lose this. You lose that one, you're going to close that gap below and then some. This is where I go, uh-oh.
Man, I shouldn't have asked. I shouldn't have brought this one up. This is one. Maybe I should trade around my long term.
No, it's not all bad news. This is the ledge.
Okay.
The downside target from this is about that much. So this is about the downside target of that ledge. So they priced it. They bumped. I told you when they pop, they'll sell it. So now they're selling it. The battle is still going on with higher lows and lower highs. That's normal. That's how you set a bottom. You stop making lower lows. You start making higher lows. Lower highs is okay. You have a descending trend, an ascending trend. They come to blows somewhere at a pivotal zone. Somewhere in here is going to lie a fight. Now, if they break through and then they start inching forward, suddenly this becomes a trend to recover, and then expect sellers up here. Now, the disaster is that if the markets come down and this triggers, you're going to fill this gap and then some. So don't catch the falling knife if you lose this. And if it stops here and it bounces, get out of the longs. Use the bounce to get out, because if they trigger this, then they bounce to it, they'll find a lot of sellers, and they'll come back and they'll continue this lower high and fill the gap. So that's not my forecast, but that's the price action that's happening, and it needs the market to hold it above this. And you have earnings coming, so.
Just messing with my headphones right now. All right, Nic Chahine. Fine, this will be the very last one. Pinterest, and after this, we're done. Nic Chahine, Pinterest.
If you want more, you got to pay.
You have to want more. You got to pay.
Well, that's the point. If you're so hungry for charts, this happens all day, every day. So, how much is that worth? So Pinterest,
yeah, and I think on top of that, like being able to ask for charts, I like on the options inner circle chat room within Benzinga Pro, which you get access to. You can ask about a specific trade, right? I can say, hey, Nick, I'm looking at some.
I was helping people that are stuck in trades. Like yesterday, I said, okay, I went long Lily. And what do I do with my win? I can book it. It was like 25%, 22%, or I can sell calls against it for the sweep. So here we have a lower high trend knocking on the floor. Well, that floor was here too, and here, and here. So you can't count on the floor, but the fight is here. So first step, you stop making lower lows. Lower highs is fine. And then they're going to fight here soon. So I think the fight's going to be around 35. And if they can pop above 35, not by much, then you may be able to start turning it into a higher low trend. So you need progress. You monitor the progress versus the lower high. And every level you lost on the way down, you're going to have to deal with on the way up. So then you expect a fight just above here, right here. And then this one, you would expect a fight here. But the point is now you're ascending. And it's important to look left. Okay, so that doesn't bode a lot of confidence, right? You don't build a castle on top of a hole. So
that's true.
I think if you lose this, I don't think this will hold, and they'll probably fill the gap, and I'll feel better about it. This is a P&L that's growing crazy, if I remember correctly. So the fundamental picture does not agree with the chart picture at all. It's almost like there's a conspiracy against it. Look at the 755, 1.1, 1.7, 2.4. Now they're 300 million profitable, almost 2 billion in gross profit. Is it expensive? No. 9 price to sales. Even at the PE level, it's not that crazy. But the stock is falling like it's Nikola. So it doesn't make sense.
Don't build castles on top of holes. I think Confucius said that. Anyway, Nic Chahine joins us every Wednesday to learn more from Nick, hear more from Nick, get more stock picks and advice and all that. Click on the link in the description in the chat. And Nick, have a good one, man.
You too. Thanks for the invite. I always have a lot of fun in here.
All right. See you later.
See you next week, Nick.
And he's gone. Yo, did anyone see what is going on at BBIG? This is the problem with buying meme stocks on hope. This is what they can do to you. Rip your face off. Look at BBIG today. Fallen out of bed.
Holy cow. Wait, I saw on Stock Twits.
Yeah.
One of the trending stocks was like Cryptide, but the person that was talking about it, which isn't even like trading yet, was talking about BBIG. Like, I don't know what the relation is there between BBIG and Cryptide.
I don't know either. Okay, screw it. So wait, what's
BBIG stock pops once again on rumors of Cryptide launch. I guess Cryptide is never mind. I'm silly. We talked to them about this, I think.
Yeah, but it was like 6 months ago. People like assume that I remember things. Like, so we had Ted on this show legitimately. I think it was like November. Okay, it may have been October.
That was not 6 months. What month is it?
It was almost 6 months
ago. It was 2 months ago.
No, I'm gonna.
It feels like 6 months ago.
It feels like 6 months ago.
I think it was October. I think, or maybe beginning November. But yeah, we talked about Cryptide then. I guess it's some sort of crypto platform under BBIG.
It was October 20th. I looked it up in our system. October 20th. That might as well have been 6 months ago.
That's almost exactly 3 months ago.
I know.
Okay. Just so we're all clear on how time works.
I can't remember what I have.
Dude, you know what I think is the easiest trade right now, and I'm not saying go out and do this.
Buy DWAC? What?
No.
What?
Short Peloton. It's up 5% today. Maybe on the news that they're hiring McKinsey. I don't know. To me, like that's the most bearish thing. You don't hire McKinsey if everything's going well at your company, right?
So like yes and no, right? Because and this is like the ruthlessness of like the stock market and Wall Street is. What do layoffs mean at the very core? It's cost cutting, right? That's what it is. It's a cost cutting measure.
But you don't do layoffs if you're like growing rapidly and you need that workforce. You do layoffs if you're not growing.
This is also true.
I'm just gonna pull this headline up here.
For whatever reason,
the company is spinning out. Peloton considers store closures as stock price plummets.
Wait. What website is this?
I don't know. Biznow.com.
Stop. I don't know BizNow. No disrespect to BizNow.
Peloton Insider sold nearly.
I have a rule of thumb. Wait, no, seriously. This is serious stuff because this applies to like media literacy. Okay, I have a rule of thumb. My rule of thumb is very simple. If I have never heard of a website, then I am immediately skeptical. It doesn't mean I don't believe them.
Well, hold on.
It doesn't mean I don't believe them. It doesn't mean they're not legit. I'm not saying I've heard of everyone, right? But if I've never heard of a website and I'm reading an article, I give pause and I will take a few minutes out of my time to go look at the website, go find the about page, go on LinkedIn, go on like social media. Is this place legit? I will try to like look at stuff. Like what do they cover typically? That applies for everything. I never heard of BizNow. That's why I bring that up.
I agree. I guess my caveat there would be instead of saying anytime you haven't heard of a place you're skeptical, you should be skeptical of everything. It doesn't matter. From New York Times, they put out shit that's not.
Okay.
I'll give you a great example. Yes. This isn't market related, but it is local. A year ago or whatever, when the story came out about there was a plot to kidnap the governor of Michigan.
Oh, that was nuts.
Gretchen Whitmer.
That was crazy.
Right? And I'm reading the story as it comes out, and in my head, I'm like, oh my God, these people are crazy, whatever. And I'm reading it from New York Times, from Wall Street Journal, these reputable sources. Well, over time, the information, we get more information, and the story develops, and it's actually like, it really screwed up kind of how they did this sting. Essentially, it was like entrapment by the FBI. Like they went out and found people, the FBI undercover agents, they found people, convinced them like to join them in this, and they've basically kind of dropped the charges on like most of these people because they're like, yeah, that was
I didn't even know that.
exactly. So it's just like shows you how even from stories like New York Times and stuff, like sometimes they don't get everything right in real time, and you just got to be skeptical always.
For sure.
But I will say, one of the first things that I was taught in journalism school is that it's not the name of the outlet that determines the credibility. It's of the content itself. So that means, we talk a lot about like citizen journalism. Like that means Joe Schmo, no name guy, can go out with his cell phone, take pictures, take videos, and that content, as long as everything is objective and factual in that reporting, just because it's someone that doesn't have a journalism degree or they don't work at New York Times, does not discredit that report.
Sure.
I've also never heard of Biz Now. I'm just saying.
Okay, it's not just me.
I'm just saying, store closures, hiring McKinsey, layoffs. But they had too much inventory when no one else had inventory with the supply chain. I think Peloton. I think it's over. I don't even think Peloton is going to be a thing in 5 years.
No. Jadid's making a great point about Benzinga. What the heck is a Benzinga? No one knows what that means. It's a made up word.
Well, and that's what I'm saying is the content itself determines the credibility, not the author.
Yes.
Not because the same person that what were the guy's name from Watergate? Bob
Bob Woodward and Carl Bernstein?
Right, they're like the gold standard of journalists. That doesn't mean everything they write and put out has to be like 100% like factual. Like they could easily like put something out 2 years after that was misleading and not great. So just because it's coming from the New York Times or a reputable journalist, you should always take the content for what it is. Like last night I was reading stuff about the Uyghur genocide from different publications, and every time someone asserted something, like I was clicking on the hyperlinks like to the study, because I'm like, none of these people writing about it are actually in China, like seeing this stuff firsthand.
That's the catch. There is no one's actually. Maybe they are. I don't know. I'm sure Reuters has people. They have people.
Right, and so Reuters, like Al Jazeera, in generalizing, they're usually pretty reputable.
Yeah, so it's just a general rule of thumb that I follow for myself. If I've never heard of the website, it doesn't mean it's bad. It doesn't mean the article is shit. It just means I give pause. But Aaron's point is you should give pause always, which I guess is true. Anyway, back to the Peloton thing. For whatever reason, Wall Street likes it when you cut costs, and they hate it when you spend money. That's why Microsoft went down yesterday, right? It's because Microsoft spent money buying Activision. Whether or not the deal is good is frankly besides the point. They don't like it when you spend money, and likewise they like it when you cut costs. Even if cost cutting is the sign of bad things to come. It's a fundamental structural problem in the business that you're having to cut costs. I don't know. Sometimes cost cutting happens because of the market environment. Like Airbnb, I think, did a lot of layoffs right when COVID started.
Wait, they laid off the people that own the houses on there?
No. That wasn't even funny. That was
but like, who does an Airbnb employ? Like their
what do
whole
you mean?
business
They've got like 1,000 employees. Airbnb. It's a huge company.
1,000. That's 1,000. Wait.
They've got developers. You got marketing. You got developers.
All right.
Developers.
Okay, no, they actually have about 6,000 employees, but it's a $100 billion company. That's still not a lot of employees for a company that size.
No, but my point was in March of 2020 when shit hit the fan, they did do some layoffs, and that wasn't their fault, but it was the market environment.
Oh, speaking of layoffs, don't we have Better.com coming on?
Oh, shoot. Is that on the calendar for this week?
Zoli, you out there?
That's not tomorrow. I looked ahead. Oh, no. That's not tomorrow. That's next week, I think, Aaron.
But we're not getting the actual guy that did the layoffs.
The actual guy that did the layoffs is on a leave of absence.
Oh, really?
Yeah. Wait a minute.
Oh no, he's reinstated.
Wait. No. When is Better? Are they? I'm not sure they're confirmed yet.
He's reinstated as the mortgage lender's top boss after taking time off to reflect on his leadership. So he's back in. Good for Vishal.
You know, there is an email chain. I don't think they're not on tomorrow, and they're not on.
Maybe it fell through
Friday. I don't know. We're trying to get better on this show though. Anyway.
What do you? I like Airbnb long term. I think the only
I've been long from like the 140s or 150s. I think.
Oh, we're in the 150s right now.
Oh shit. Oh no.
Barely, where it's like 159 and a half.
Wait,
So you're still probably in the green.
Yeah.
My only like question, I guess, about the long-term bull case on Airbnb is just like, what's their moat going to be? Like, what's to stop VRBO, other apps from popping up that do a similar thing? Like maybe, because I think the biggest downside and kind of thing that people complain about Airbnb is their fee structure. I mean, I just hate how you look at a place on there and it'll say $250 for 2 nights. Then by the time you check out, it's $400. Like, just show me that $400 up front. Like, that'd be my first change day one as CEO.
You're not even not going to pay it. You just want to know.
Exactly.
Yeah,
I would still probably select that place for that price. It would just like save me the hassle of like calculating like, okay, it says 250, so it's really going to be 400. You know what I'm saying?
Yeah, for sure. I'm with you. I love Airbnb. I mean,
Firat's saying his price target's around 100, so he's bearish. I still I think it's going to continue to make a bunch of money and grow. That's my one worry is that like other competitors, is VRBO ever going to go public?
I don't know. This has nothing to do with the future of Airbnb, but I've had this thought that outside of maybe like a company like Moderna, there's no company in the world that had a more dramatic year in 2020 than Airbnb. That company...
Wait, 2020 or 2021?
2020. Well, whatever. The entire period. But maybe both years. Airbnb, like, they did layoffs. That company was in, like, full-on crisis mode right at the outset because nobody was traveling at all. And then it quickly became the exact opposite, where everybody was locked down and they were working from home. They could work from wherever they wanted, and the business turned around like on a dime. Brian Chesky wrote a very long letter just about that period for Airbnb and how just freaking bonkers it was for that. Like he didn't know if the company was going to survive, and then not only did it survive, it thrived in the pandemic.
I was so close right on the onset of the pandemic. A couple of my friends and I, at the time, I wasn't working at Benzinga. I didn't have like a real job, but some of them did, where they were able to like work from home. And they were like, let's just like these Airbnbs are so cheap. We can get an Airbnb on the beach for Florida for 2 weeks for like $500. Let's just all go down there and split it and work from home. And we didn't do it. And looking back on it, like that would have been a great opportunity because they were so cheap at the onset of the pandemic.
Wait. What does Mike's comment mean?
I have no clue.
Mike, what do you mean?
Is he saying pick a color on Airbnb? Because if so,
what?
Like green or red, maybe? That's what I was thinking.
Oh no, I think he's talking about this. That's what he's talking about. We got some feedback that it looks like a college dorm, which
it does.
I'm sort of about.
It does.
It does. Yeah.
I also like Mike's like profile picture. Is that an NFT?
I think isn't that a Bored Ape? That's a Bored Ape.
It looks cool.
Yeah.
Looks cool.
All right, Mike, we got it. Yeah, thank you.
Shelly knew what he was talking about the whole time. We didn't. So did Daniel. Zoom, Darren, I like Zoom right now at its current price. Like maybe not for a short-term trade, but long-term, I don't think Zoom's going anywhere. Like I think even as we get all back in office and whatnot, like Zoom meetings are here to stay. The companies, I don't know. I mean, it's not going to grow ever at the rate that it did during COVID, obviously, but I think they've got a very good stranglehold on the workplace telecommunications.
Zoom worries me because the metaverse would be bad for Zoom as well. And Zoom, there's just no possible way that the growth can sustain itself like it did during COVID.
Oh, Darren meant of the stock of 2020. That's a good call.
What? Oh, as Zoom?
Yeah, you said Moderna or Airbnb.
I would say, but Airbnb like almost died, like as a business. Zoom didn't have to do layoffs, to my knowledge.
In fact, they probably did a lot of hiring.
Right, the opposite. Right, Airbnb was not going to make it, and then it became like.
I know there are other companies that were maybe not going to make AMC.
Yeah, but that wasn't COVID.
Yeah,
I mean that was. Anyway, that's got nothing to do with the future of Airbnb. I still think it's a good business, and they are an industry unto themselves, which I think makes them a buy. But anyway, that's a wrap for us. It is 2 o'clock. Again, no roadmap this week. Chris Couch is out of town on vacation. So we will be back on stream in an hour and a half for At the Close. I'll be there. Mitch will be there. Everyone hit the like button.
Are Joel and Chris on vacation together?
That would be funny, wouldn't it? But no, Joel's in Florida. Chris is, I have no idea where Chris is. I think Chris is in Texas.
Is Joel golfing?
Joel is golfing.
I heard Joel said he could beat me at golf.
I can't speak to that because I have never seen Joel golf.
But can you speak to the fact that he said that?
I mean, he has probably talked smack about his golf game. Sure. I don't know about you.
Easy Mike asks, can we get AB at the close? Maybe I'll hop in for a few minutes
AB,
today.
you're more than welcome to hop.
Maybe I'll hop in for a few minutes. Who knows?
No, I don't own Zoom. I never did own Zoom. Well, that's not true. I own one of the. I own the ARKW. I own ARKW. Does that mean I own Zoom? I think so. Because I own ARKW.
Oh wait, okay. So there's no roadmap. I don't want to. We're not going to stay too much longer, but I do have something I want to talk about real quick. Well, no, I don't want to be alone. This isn't a soliloquy. There's this guy on Twitter. Here, I gotta find his Twitter real quick. Give me 1 second. Spencer, stall for a second.
Damn, son, where'd you find this?
Any suggestions for sound bites? Drop it in the chat. Any feedback at all on anything on this show or otherwise on
whatever happened to
on our wardrobe? Email us, shows@benzinga.com.
Is 13 still out there?
13's still out there. 13 hangs out in the Benzinga Pro chat a lot. 13's around.
Oh, dude.
What?
I tried to go to this guy's tweets, but we're blocked. But that's on the Benzinga account. I'll go to it on my personal.
Nice.
There's this small group of FinTwit people have us blocked on Benzinga. I really don't know why.
Because we don't always kiss ass on AMC and GameStop.
No. It's the opposite. It's like Tesla charts. It's these people that are super like bearish Tesla, like the Tesla Q community. I guess thinks that we like published like too many bullish.
Whatever.
I don't know. It's like we don't even publish bullish or bearish.
We go where the price goes.
Exactly.
What do you want from us?
But anyway, so this guy, Cuba. Let me try to find it.
Okay, I'll just sit here. Cool.
Okay, here we go. I got it. I ran into trouble because it's like and I'm on my Safari, a different browser. So this guy, he hates our good friend Ross Gerber.
A lot of people hate Ross Gerber.
I know, and it I mean, I don't think it needs to be very, so black and white. Like, I think I can agree with Ross on some things, disagree with him on either, but I don't need to like hate him or whatever. But he was going in on Ross Gerber yesterday about how I guess Ross was celebrating the Activision deal after Ross had sold out of the. So here's what happened. Ross Gerber said he sold out of Activision in the fund. And when Ross said that, and this was just all on Twitter, I read that as that he sold out of it out of the GK ETF that we had Ross on. He talked about whatever.
Was that not what he was referring to?
No, I believe it is. But this guy who hates Ross spun that as like Ross doesn't hold any Activision anymore, which if you look into the filings of Gerber Kawasaki, they still hold a bunch of Activisions, just not in the ETF. And also, Microsoft is a huge holding of Ross's, as well as the third biggest holding in the GK ETF. So to me, it was just like crazy. It's like basically this guy was saying, and I know there was more, was basically saying like, oh my God, Ross is so dishonest. Like he's celebrating Activision like he never sold out of it, or he's celebrating the deal. Oh, here we go. Ross Gerber bought Activision in the 90s for his GK fund, wrote it down to about 30%, sold in the 60s, then went Twitter activist, is now doing victory laps watching. It's like, look, this dude can sell out of the fund and still be happy of this deal considering he's such a big holder in Microsoft and still Activision, just not in the ETF.
Yeah, I'm not sure I'm following this guy. I'm not sure I'm.
He literally just hates Ross Gerber so much that like anything. I think he's the one that like coined like goober, or he'll say like Tesla's down like one goober today. I don't know. Either way, it was just some FinTwit drama today or yesterday that I thought was interesting. And I'm gonna take Ross's side here. He's our guy.
I'm not sure. I wouldn't even call him our guy per se. Maybe he's your guy.
He's a friend of the show.
Friend of the show. I'm not sure I'm following this guy's criticism other than, I mean, if you want to just what? He's entitled to his opinion. I mean, I don't know. Like,
He's just a hater.
People are entitled to buy and sell stocks whenever they want.
Exactly.
You know what I mean? I don't know. Whatever. It is what it is.
I will say I agree with Ross here that I don't, and I said this yesterday, I don't see any viable like antitrust. And I say this as someone who is not a lawyer or very knowledgeable on antitrust things.
So okay,
I just don't see an antitrust suit because together Microsoft and Xbox and PlayStation don't even make up the majority of video games, and then Call of Duty doesn't make up a fraction of the like total gaming industry.
Okay, so great point that we brought up today on pre-market prep. I totally did not think about yesterday. We're talking about the spread here between the takeout price $95 and the trading price $81. So we already know that the deal is not going to close for like at least 13 months, right? Think about the time value of money. What's inflation at? 7% if you want to go by what the government says. 7%. What's 7% of 95? What's that, like 6?
Sure. That sounds good.
It's not quite $6, right?
10% would be 9.
It'd be 9.50. So it'd be like 7 and change, right? Talking seven, right? 7 and change, whatever. We'll just ballpark and say $7, right? The time value of money. You hold Activision, until the deal closes. You're losing 7% of your money, right? If inflation stays at the current rate. So I would say cut 7% right off the top here. So 95 money, take 7% off that. That should be where your stock trades at, right? It's just the time value of money. You got money locked up on this thing, and cash is losing value because of inflation. So don't forget about that. But anyway, okay, we're gonna wrap it up here. We've been live for over 2.5 hours. Very, very good show today. Good show, Aaron. Thanks to all of our guests. We appreciate them hopping on with us. Thanks to Tony. Thanks to Nick. Thanks to Brian. Thanks to Mark. Thanks to all of you in the chat. Any feedback, as always, shows at benzinga.com. Hit that like button for us,
or straight
please.
to Jason at benzinga.com.
I'd rather you not do that, but if you must.
All right. Happy trading, Zinger Nation. Love you guys. We'll be back tomorrow. Please follow us on Twitter, Instagram, TikTok. Really helps us. Helps out the crew.
Follow us on TikTok. He's got some like hot TikTok content coming your way.
Not yet, but coming.
It's coming your way.
Coming soon.
Seriously, Benzinga on TikTok. For
Benzinga
real.
on TikTok.
I'm not messing around.
Not messing around.
No, he's not. He sounds like he is.
Or
but
what
he's
does
not.
David Green call it? Tic-tac?
Tic-tac.
Tic-tac. Yeah, follow us on
It's
Tic-tac.
a wackadoodle.
Oh, holy cow, Jay. You'd kick my ass. He's a fucking 2 handicap.
And we're done.